A very good morning, students. Welcome to the Stress Test Taxation classes. Now, in this session, we are going to discuss about RTP, Revision Test Papers for May 2023. Right, Ma? So, it recently released by the ICI just 2-3 days back. Right, sir? So, first we will discuss RTP questions from income tax law, and then after that we will discuss RTP questions from GST. And my suggestion is that before you are going to listening to this RTP classes, first listen the amendments classes from income tax and as well as from GST. Right, sir? So we have already uploaded all the amendments classes relating to income tax and as well as GST in our app and as well as in the YouTube. So first listen to such classes, and then after that try to listen to this RTP classes. So the concerned videos and links will also be provided in the description of this particular video. Okay, sir. So let us start here. First, let us discuss the questions from the income tax law. So the income tax law, see, up to 31st of October 2022, right? So whatever the amendments made applicable, so all such amendments are applicable for May 2023 examination. Okay, sir. So you can see here, income tax law as amended by the Finance Act 2022, including all the significant notification circulars issued up to 31st of October 2022, applicable for May 23 examination. So in our income tax amendments classes, we have discussed all the significant amendments up to 31st of October 2022. Okay, ma. Now, let's moving on to the first case scenario. Kishore and Sons is a dealer of coal. Its turnover for the financial year 21-22 was 12 crores. So preceding financial year turnover 12 crores. The state government of Hyderabad granted a lease of coal mine to Kishore and Sons on 1st of May 2022 and charged 11 crores for the lease. Right, sir. So here the first transaction, RTP, May 2023. That section A, income tax. Case scenario is we are discussing. The first transaction is like this. State government of Hyderabad granted leasing of coal mine to Kishore and Sons. To Kishore and Sons. Okay, sir. Now, for this purpose, Kishore and Sons have to pay a consideration of rupees 11 crores. Rupees 11 crores. And Kishore and Sons preceding previous year, that is preceding financial year, that is 2021-22 turnover given 12 crores. So far, this is a transaction we have seen. Kishore and Sons is the dealer of the coal and turnover during the financial year 21-22 12 crores. state government of Hyderabad granted a lease of the coal mine, and that state government of Hyderabad charging 11 crores for the lease and it. Now Kishore and Sons sold coal of 95 lakhs to measures BSc and Co during the previous year 2022-23. So this is a second transaction. Second transaction is between Kishore and Sons Kishore and Sons is the dealer of the coal, sold 95 lakhs worth of coal to measures BAC and Co. So here Kishore and Sons is the seller of the coal, measures BAC, buyer of the coal. That's what the second transaction is. Kishore and Sons sold coal worth of rupees 95 lakhs to measures BAC and Co. during the previous year 22-23. Measures XYZ Limited purchased coal of 55 lakhs from Kishore and Sons for trading purposes in July 2022. This is a third transaction. Third transaction. Third transaction. Kishore and Sons sold 55 lakhs worth of coal to measures XYZ and Co. Measures XYZ and Co. And measures XYZ using such coal for trading purposes. Using such coal for trading purposes. For trading purposes. Right, sir. Now, turnover of measures XYZ Limited during the previous year 21-22 was 12 crores. PAN is duly furnished by the buyer and seller to each other. So, measures XYZ Limited preceding financial year turnover is given. Preceding financial year, that is 2021-22 turnover given, that is equal to 12 crores. 12 crores. Very good. Now moving on. Details of the sale to and payments from measures BAC and Co. by Kishore and Sons are as follows. See, in this transaction, we've already seen Kishore and Sons sold 95 lakhs worth of coal to BAC and Co. And how the transactions were taken place, explained here. Right, sir. You can see on 29th of May 2022, 35 lakhs worth of coal sold to measures BAC and Co. And the payment for the same we have received on 10th of May 2022. Now again on 30th June we have sold 25 lakhs worth of coal. The payment received against to the same on 10th of July. So like this, totally 5 transactions we have entered into with measures BAC and Co. Are you following, sir? Every one of you. And if you total all such these particular transactions, you'll get what amount? You'll get 95 lakhs answer. If you total all this. So 35 plus 25, 60, 68, 68, 73, 83, 95 lakhs. 95 lakhs you will get amount. Okay, next. Next, moving on. Turnover of BSc Limited during the previous year 21-22 was 11 crores. So even BSc Limited turnover is also given to us. Yeah, here it is, BSc Limited. During the preceding financial year 2021-22, the turnover of BSc Limited given how much, Amma? 11 crores. 11 crores. Next. The above amounts were credited to Kishore and Sons account in the books of Measures BSc on the date of sale. So on the same date, whenever the sales taking place on the same date, the amount got credited. The amount got credited in the books of account of the BSc. Okay, ma'am. Measures BSc furnishes a declaration to the Kishore and Sons that this is very important point. Measures BSc and company furnishes declaration to Kishore and Sons that the coal is to be utilized for the generation of the power. See here, Measures BSc buying 95 lakhs worth of coal from Kishore and Sons, and that coal BSc and company is going to be used for this buyer BSc and company using such coal for the generation of the power. For the generation of the power. So that means that here Measures BSc and company, whatever the coal it is purchasing, it is not reselling. It is not reselling. It is using for the generation of the power, captive consumption, self-consumption. So by using that particular coal, they are generating the power, and that power is being used by Measures BSc and Co for its business purposes. Self-consumption, captive consumption, it is not reselling. So BSc and company is purchasing the coal not for the trading purposes, but for the personal purposes. This is a very important point. So now let us see the questions. Based on the above facts, choose the most appropriate answer to question number 1 to 5. First one, who is required to deduct or collect the tax at source in respect of the lease of coal mine? In respect of the lease of coal mine by the state government of Hyderabad to Kishore and Sons, and at what rate? Leasing of coal mines, the first transaction. So state government of Hyderabad given the leasing of the coal mine to Kishore and Sons, for which they are charging a consideration of 11 crores. Right, sir. Now here the leasing of coal mine covered under section 206C TCS provisions. Now Kishore and Sons, while paying this consideration of 11 crores to state government of Hyderabad, now Kishore and Sons has to collect the TCS under section 206C at the rate of 2%. At the rate of 2%. Are you following, sir? Every one of you. Leasing of coal mines. 2% is the rate of TCS. See, selling of coal, the TCS is attracted at 1%. But this is not the selling of coal. This is a leasing of coal mine. State government of Hyderabad granting the leasing of the coal mine to Kishore and Sons. Mining, quarrying, 2% is the rate of TCS. Are you following or not, Amma? Every one of you. So you can check out in our material also. Module number 2. We are in the chapter TDS and TCS. Yes, here you can see every person who grants lease or license or enters into a contract or otherwise transfers any right in interest in parking lot, toll plaza, mine or quarry. Right, sir? Every one of you. For the use of such parking lot or toll plaza or mine or quarry for the purposes of the business shall, at the time of debiting the amount payable by the licensee or lessee to the account of the licensee or lessee, or at the time of receipt of such amount from the licensee or lessee, whichever is earlier, collect from the licensee or lessee a sum equal to the following percentage. How much? When it comes to the mining and quarrying, it is 2%. It is 2%. See, during the COVID times, we got some concession. So that's why it is showing it as 1.5%. Now the COVID times completed. Now you have to collect what amount? 2%. This is during the COVID times. Okay, now. So at 2%, we need to collect the TCS and every one of you. This is provision only applicable at the time of COVID times. Now it is 2% for mining and quarrying. Clear, sir. So the question is, who is required to deduct or collect the tax at source? So Kishore and Sons have to collect the tax at source at the rate of 12% on the entire consideration of 11 crores. That is the answer. Check it out. Sorry, not the Kishore and Sons. State government of Hyderabad have to collect the tax, TCS, at the rate of 2% on 11 crores a day. Every one of you. Okay, not Kishore and Sons. Kishore and Sons is here is a, the lessee, right? So you can check out here the answer 1A. 1A. State government of Hyderabad is liable to collect the tax at source at the rate of 2% on 11 crores. Every one of you. Okay, next. So 1A is the right answer, sir. Next, moving on. Second question. Is Kishore and Sons required to collect the tax at source in respect of the sales transactions with measures BSE and company? Sales transactions with measures BSE and company? If yes, when and what is the amount of the tax to be collected? Sir, here, if you observe the provisions of section 206C1, selling of the coal is subject to the TCS at the rate of 1%. Right, sir? So we can see in our material, every person being a seller shall at the time of debiting the amount payable by the buyer to the account of the buyer at the time of receipt of such amount, whichever is earlier, collect from the buyer a sum equal to the, you can see here, when it comes to minerals being coal, 1% is the rate of TDS under. During the COVID times, it is 1.75%. You can just ignore now this. Ignore now this. Okay, but this is only applicable during the COVID times, right? So now 1% is the rate of TCS on selling of the coal. See, leasing of the coal 2%, selling of the coal 1%. Every one of you following now, right? But here, measures BSE and company buying the coal for the captive consumption, clearly said, for the generation of the power. For the generation of the power. Hence, it comes under captive consumption. Hence, the seller is under no obligation to deduct the TCS. See, when it is being used for trading purposes, then only the TCS is subject to be collected, and then only the TCS is subject to be collected. Right, sir? So since here it is for the captive consumption, self-consumption, not for the trading purposes, no TCS is to be deducted, collected. So the answer, you can see 2D. No, Kishore and Sons is not liable to collect the tax at source. 2D. Okay, sir. Every one of you. So that's why while I'm writing the notes itself, I mentioned this is very important point. Measures BSE and Co using such coal for the generation of the power, self-consumption, captive consumption. They are not buying for the trading purposes. Okay, next. Third question. Is Kishore and Sons required to collect the tax at source in respect of the sale transaction with measures XYZ Limited? If yes, what is the amount of the tax to be collected? The answer is absolutely yes. So the third transaction, Kishore and Sons sold 55 lakhs worth of coal to measures XYZ and Co. Using such coal for the trading purposes. Using such coal for the trading purposes. Are you following, sir? Every one of you here. So Kishore and Sens, they have to collect the TCS under section 206C1 at the rate of 1%. So that is equal to 55 lakhs into 1%, 55,000 rupees. 55,000 rupees. Every one of you. Following, sir. Right? So here in the third case, we have seen Kishore and Sons. Here we have already identified. So measures XYZ Limited purchased coal of 55 lakhs from Kishore and Sons for the trading purposes. Clearly mentioned, for the trading purposes, not for the personal purposes. For trading purposes in July 2022. Okay, ma, every one of you. So that's why this particular transaction is subject to TCS, and accordingly Kishore and Sons can collect, being the seller of such coal, can collect 1% rate of TCS. And we have already seen in the material, when it comes to the selling of the coal, the rate of TCS is 1%. Okay, ma, every one of you. Next. That's the answer for the third question. So 55,000 rupees is the answer. 55,000. 3A is the answer. Yes, 3A. How did you get this 50,000? 55 lakhs into 1%, 55,000 rupees. Clear, amma, every one of you. Next. Moving on to the fourth question. Is Measures BSE and Company required to deduct the tax at source in respect of the purchase transactions with Kishore and Sons? If yes, when and what is the amount of tax to be deducted? So here, when it comes to the second transaction, Kishore and Sons sold coal worth rupees 95 lakhs to Measures BSE and Company. Right. Now, here you can see Measures BSE and Company turnover 11 crores during the preceding financial year. Now, on this transaction, Measures BSE and Company is subject to deduct the TDS under section 194Q. Under section 194Q. So, what are the provisions? What are the conditions to be satisfied for the application of 194Q? Sir, here the buyer's turnover during the preceding financial year should be greater than 10 crores. Condition satisfied. During the preceding financial year, the buyer's turnover is 11 crores. And the transaction value should exceed 50 lakhs rupees. Single transaction or aggregate of transactions with such particular seller should exceed the 50 lakhs rupees. Exceeding 50 lakhs rupees here? Yes or no? So then the buyer is under an obligation to deduct the TDS at the rate of 1%. At the rate of 1%. And 1% on entire 95 lakhs? No, sir. 1% on only the value exceeding 50 lakhs rupees. The value exceeding 50 lakhs rupees. Are you following, sir? Every one of you. So you can check out here when it comes to the transactions given here. Yeah, here. The first transaction is on 29th of May 2022. The sale was happening and the payment received on 10th of May and the amount is 35 lakhs. Sir, now whether on this 35 lakhs, TCS is subject to the collected? No, sir. Not required to collect because the value not exceeding 50 lakhs rupees. You can check out in our TDS and TCS material about the 194Q. Yeah, here it is. Purchase of the goods. So more than 50 lakhs in a previous year, that's the threshold limit. Buyer who is responsible for paying any sum to any resident for the purchase of the goods. That buyer is under obligation to deduct the TDS. What do you mean by the buyer here? Buyer means a person whose total sales or gross receipt turnover from the business exceeding 10 crores during the financial year immediately preceding the financial year in which the purchase of the goods is carried out. That means during the preceding financial year, his turnover should exceed 10 crores amma. Next, payee could be any resident. And what is the rate of TDS? 0.1 percentage. Sorry, I guess I mentioned it as 1 percentage. 0.1 percentage. 0.1 percentage of the sum exceeding 50 lakhs rupees. That means up to 50 lakhs, no TDS. Up to 50 lakhs, no TDS. In excess of 50 lakhs, yes. Only for that excess portion, the rate of TDS is applicable. And when the TDS to be deducted, at the time of credit of such sum to the account of the payee, or at the time of payment, whichever is earlier. So that's why in the question it was clearly mentioned on the date of sale itself. So the date on which the sale taking place, on the same date, the above amounts were credited to Kishore and Sons. Credited to Kishore and Sons account in the books of Mrs. BSE on the date of sale. So the date of credit is given the date of sale and so date of credit or date of payment, whichever is earlier. Okay, now so on first 35 lakhs, no TDS. Now second transaction taken place during the 30th Jan 2022, 30th June 2022, and on the same date, the Kishore and Sons account was credited in the books of BSE and Company. Date of payment 10th July and the amount 25 lakhs. Yes. Now, after putting these two transactions, 35 lakhs and this 25 lakhs, now the aggregate comes to be what amount? 60 lakhs. Now, yes, subject to TCS. Now, subject to TCS. Every one of you following this, right? Just a second. So this 35 lakhs and 25 lakhs total comes to be how much amount? 60 lakhs. So that means the aggregate value exceeding 50 lakhs. So the total comes to be aggregate 60 lakhs minus we have the threshold limit of 50 lakhs. Only 10 lakhs here is subject to TCS at the rate of 0.1 percentage. So 10 lakhs into 1 percentage, how much you are getting amount? 10 lakhs into 0.1 percentage. 1000 rupees is the TCS to be collected under. At what date? Date of credit or date of payment, whichever is earlier. Among these two dates, whichever is earlier, you have to take. So the earlier date is 30th June 2022. So Mrs. BAC and Co have to deduct the TDS under section 194Q 1000 rupees on 30th June 2022. Third transaction taken place on 25th of November, payment received on 25th of October, and the amount is 8 lakhs. Now from here onwards, every transaction is subject to TDS because from here itself, the threshold limit exceeded. Okay, now it is 8 lakhs into 0.1 percentage. It will be 800 rupees. 15 lakhs into 0.1 percentage, 1500 rupees. And 12 lakhs into 0.1 percentage, 1200 rupees. These are the amounts of TDS to be deducted by the measures BSE and Company. And at what date? Whichever is earlier directly. 25th of October, 20th of January, 15th of February. So these are the dates to be deducted, TDS to be deducted, and right. So 1000 on 30th June, 800 on 25th of October. Now select the answer where it is. 1000 on 30th June, 800 on 25th of October. Okay. Next, 1500 on 28th January, 1200 on 15th of February. 1500 on 28th January and 1200 on 15th of February. Yes. Option A is the right answer. Every one of you following this here, right? So look at here, option A. Fourth, option A. Okay, sir. Every one of you. So BSE and Company required to deduct the TDS under section 194Q in this following transactions. Clear, sir? Next. Fifth one. Assume for the purpose of this MCQ, only for this purpose of MCQ number 5, measures BSE and Company turnover. Measures BSE and Company's turnover during the financial year 21-22 was 9 crores only. So that means measures BAC and company is not required to deduct the TDS. Not required to deduct the TDS under section 194Q. Because its turnover during the financial year was, during the preceding financial year was just 9 crores only. We have seen that the buyer's turnover during the preceding financial year should exceed 10 crores. Should exceed 10 crores. But here it is mentioned it is only 9 crores. So that's why measures BAC and company not required to deduct the any TDS under section 194Q. Who will be required to deduct? No, deduct chance ledinka. Or collect the tax at source in respect of transactions between Kishore and Sons and measures BAC and at what rate? See, first of all, measures BAC's turnover during the preceding financial year, since less than 10 crores, they are not required to deduct the TDS. At the same time, even Kishore and Sons also not required to collect the tax at source. Kishore and Sons not required to collect the TCS. Why, sir? Because in the very first 10 minutes itself, we have discussed measures BAC and company using that particular coal for the generation of power, self-consumption, personal purposes. That is why in one MCQ also we have decided that in this particular MCQ, Kishore and Sons is not liable to collect the tax at source. That is already decided since BAC and company using such coal for personal purposes. So that's why you can see here. You can see here the question asked about who will be required to deduct the TDS or TCS. So BAC is company not required to deduct the TDS as the preceding financial year turnover is less than 10 crores. Kishore and company not required to collect the TCS because BAC and company using such coal for trading purposes. Clear, every one of you. Sorry, personal purposes. So that's the answer. Check it out. Neither Kishore and Sons is liable to collect the tax at source, nor measures BAC and company is liable to deduct the TDS. Okay, sir. So the answer will be 5D. So reason also I've explained already. Okay, now. So case scenario completed. With respect to case scenario, 5 MCQs given, 5 MCQs we have completed successfully. Now let's moving on to the MCQ number 6. Mr. Virat has a house property in Chennai, which he let out to Mr. Sumit. It is a let out property, sir. It is a let out property. MCQ number 6. MCQ number 6. And the transaction going like this. Mr. Virat he is having a house property which he had let out the same to Mr. Sumit. To Mr. Sumit. Okay, ma. For acquisition of this house, Mr. Virat has taken a loan of rupees 30 lakhs at the rate of 10% per annum on 1st of April 2016. So, loan number 1 for the purpose of acquisition of this house, he has taken a loan of rupees 30 lakhs at the rate of interest of how much, Amma? 10% per annum. At the rate of interest of 10% per annum. Okay. Next, he has further taken a loan of rupees 5 lakhs at 12% per annum on 1st of July 2022 towards repairs of the house. He also taken another loan. This is, I can say, loan number 1 and loan number 2. How much he has taken amount? 5 lakhs at 12% per annum. 5 lakhs rupees at the rate of 12% per annum. And this is during the current previous year on 1st of July 2022. And what is the purpose of this loan? This is taken towards repairs of the house property. Okay. He has not paid any amount of the loan so far. So both the loans are unpaid. So that means the full amount of interest is applicable on both the loans. The amount of interest deduction under section 24B to Mr. Virat for the assessment year 23-24 if he opted for the provisions of section 115 BAC, concessional rates of taxes. Concessional rates of taxes. Sir, here, when you opted for the provisions of section 115 BAC, you'll be having advantages and disadvantages. What are the advantages? Lower rates of taxes. Lower rates of taxes. What is the disadvantage? You have to forego many deductions and exemptions. And one of that exemption benefit is that you don't get the benefit of self-occupied house property benefit. Right, sir? You don't get the benefit of self-occupied property. Means if you self-occupy the property, there will be always a loss. There will be always a loss. Because when it comes to self-occupied property, straight away the format starts with the NAV 0. Since NAV 0, standard deduction 0, the only deduction allowed to you is interest. And that is to subject to a maximum of 2 lakhs rupees. So 0 minus 2 lakhs, always you will get a loss of 2 lakhs 100. But that self-occupation benefit loss not available during the provisions of section 115 BAC. If you opted for 115 BAC, you don't get the self-occupation benefit. But don't worry, in the question it was clearly mentioned it is a let-out property. When it comes to let-out property, even though you opted for provisions of section 115 BAC, you can still claim interest under section 24B. You can still claim, absolutely no problem. So now calculate the interest amount with respect to the loan one. The interest will be interest for the current financial year 2022-23 will be 30 lakhs into 10%, that will be 3 lakhs. Now with respect to loan 2, interest under section 24B is equal to 5 lakhs is a loan amount into 12% is the rate of interest into 9 by 12. Because during the current previous year only, we have taken this loan. So only we started paying the interest from July onwards. So July to March, it will be 9 months. Yes or no? So 5 lakhs into 12% into 9 by 12. So it will be 45,000 rupees. It will be 45,000 rupees. So on loan 1, it is 3 lakhs and on loan 2, it is 45,000. So the total interest allowable as deduction is equal to total interest allowable as deduction under section 24B is equal to 3,45,000. 3,45,000. So that's the answer. 3,45,000. Yes. 6C is the answer. 6C. Clear, sir, every one of you. And how did you get that amount? This is what and how you get this amount under 3 lakhs on the loan 1 and 45,000 is the loan 2. But sir, there is a restriction of 2 lakhs only now. 2 lakhs restriction is applicable only when it comes to self-occupied properties. This is let-out property, clearly mentioned. It is a let-out property. So when it comes to the let-out properties, there is no restriction with respect to interest amount. Okay, now next MCQ number 7. MCQ number 7. Mr. Rishabh, aged 65 years, senior citizen, and a resident in India, has a total income of 4 crores 50 lakhs, which comprising of the long-term capital gains taxable under section 112 of 85 lakhs. Again, long-term capital gains taxable under section 112A of rupees 75 lakhs. And the balance is the other income of 2 crore 90 lakhs. What would be his tax liability for the assessment year 23-24? Assume that Rishabh has opted for provisions of section 115 BAC, alternative taxation structure, concessional rate of taxes. So let us do this. MCQ number 7. MCQ number 7. Calculation of tax liability of Mr. Rishabh. Calculation of tax liability of Mr. Rishabh for the assessment year 2023-24. Okay, sir. Now, total income given, how much? 4 crores 50 lakhs. 4 crore 50 lakhs, which comprising of number 1, long-term capital gains under section 112 to the extent of how much amount? 85 lakhs rupees. 85 lakhs. So first, let us find out the tax liability on this. Income tax is equal to 85 lakhs into, it is a special income taxable at a flat rate of 20%. So it will be 17 lakhs. Add surcharge at the rate of 15%. Why, sir? Here the assess's total income is 4 crore 50 lakhs. So if the individual's total income in between 2 crores to 5 crores, it is 15% now. Sorry, 25% now. Sir, the higher slab rates of 25% and 37% not applicable for special incomes. Long-term capital gains under section 112, long-term capital gains under section 112A, and short-term capital gains under section 111A. Yes or no? It is a special income. So the maximum rate of surcharge applicable only 15%. So 17 lakhs into 15%, 2 crores 55 lakhs, sorry, 2 lakhs 55,000. So income tax plus surcharge 19 lakh 55,000. 19 lakh 55,000. Now the second income we are having long-term capital gains under section 112A, that is 75 lakhs. 75 lakhs. And we all know that when it comes to long-term capital gains under section 112A, we have an exemption benefit up to 1 lakh. And so first claim that exemption benefit minus exemption 1 lakh. So the taxable long-term capital gains under section 112A 74 lakhs. Now income tax 74 lakh into 10% now. 112A 10%, 7 lakh 40,000. Add surcharge at the rate of 15%. It is also special income. The maximum rate of surcharge applicable 15%. 7 lakh 40,000 into 15%, 1 lakh 11,000. So income tax plus surcharge 8 lakh 51,000. Okay, now and finally the other income which is subject to be taxed at slab rates only. How much? 2 crores, 90 lakhs, huh? 2 crores, 90 lakhs. 2 crores, 90 lakhs. So up to rupees 2,50,000, it is nil. Then immediately we'll get a doubt here. Sir, SSC is a senior citizen, aged 65 years. So what? He opted for the provisions of section 115 BAC. So where the slab rate started for every individuals. The slab rate started for every individual at 2,50,000 only. You can check out here also. Yeah. The individuals who are opted to optional tax rates under section 115 BAC. Right, sir? So up to 2,50,000 nil. Clear? Every one of you. So up to 2,50,000 nil. The next slab will be 2.5 lakhs to 5 lakhs. So here the difference of income is 2.5 lakhs. And the rate of tax applicable is 5%. It will be 12,500. Next, 5 lakhs to 7.5 lakhs. Again, 2.5 lakhs into 10%, 25,000. Then 7.5 lakhs to 10 lakhs. Again, difference of income 2.5 lakhs into 12.5%, 37,500. And then 10 lakhs to 12.5 lakhs, 2.5 lakhs into 15%, 50,000. Just a second. Sorry, ma. Reach. And this should be 20%. So 50,000. Now 12.5 lakhs to 15 lakhs. Again 2.5 lakhs into 25%. It should be 62,500. And now comes from 15 lakhs to 290 lakhs. Up to 2 crores 90 lakhs. The other income is 2 crores 90 lakhs, 290 lakhs. So 15 lakhs to 290 lakhs. The difference of income 275 lakhs into 30%. 275 lakhs into 30%. So it should be 82 lakh 50,000. 82 lakh 50,000. Every one of you. Okay, sir. Now here comes the total income tax. 12,500 plus 25,000 plus 37,500 plus 50,000 plus 62,500 plus then 82 lakh 50,000. So 84 lakh 37,500. 84 lakhs 37,500. Add surcharge at the rate of 25%. Surcharge at the rate of 25%. So other income we can apply the highest rate of surcharge 25%. So 84 lakh 37,500 into 25%. It should be 21 lakh 9,000. 21 lakh 9,375. So when it comes to other income tax plus surcharge comes out to be 1 crore 5 lakh 46,875. 1 crore 5 lakhs 46,875. Now add all the total of income tax plus surcharge, this one and this one and this one, right? So thereby we can apply the health and education cess on the total. So it should be 19,55,000 plus 8,51,000 plus 1 crore 5,46,875. The total comes out to be the total of income tax plus surcharge is equal to 1 crore 33 lakhs 52,875, for which add health and education cess at the rate of 4% into 4%, 5,34,000, 115. So the total income tax liability comes out to be total income tax liability comes out to be 1 crore 38 lakh 86,990. 1 crore 38 lakh 86,990 rupees. So that's the answer for the MCQ number 7. MCQ number 7, 1 crore 38 lakh 990. That is what we got now. 1 crore 38 lakh 86,990. Every one of you. Okay. So here you can see 7B is the answer. 7B is the answer. Clear, sir? Every one of you. And this is how we got the answer. So just go through it and ask the doubts if any, sir. Completed, sir. Now moving on to the next one. MCQ number 8, the last MCQ. After that, we'll be having the descriptive questions. Excuse me. Mr. A engaged in retail trading of toys, had acquired a motor vehicle A for rupees 4 lakhs on 20th August 2020. So the year of acquisition, so I'll let you know in this particular notes itself. Notes, we'll have the notes for this one also. MCQ number 8. So motor vehicle A for rupees 4 lakhs on 20th August 2020. Motor vehicle A purchased on 20th August 2020 and put to use on 4th of October 2021. Date of put to use. Date of put to use 10th of April 2021. Am I right? Sorry, 4th of October 2021. 4th of October 2021. So you can see here, it was purchased during the previous year 2020-21. However, put to use during the previous year 2021-22. Put to use during the previous year 2021-22. Okay, ma, every one of you. Purchased in the previous year 2020-21 and date of put to use during the previous year 21-22. Clear. Now here, sir, in the date of put to use, it is given 4th of October 2021. So that means how many days it was used, and the number of days it was put to use. Number of days put to use. number of days put to use is equal to 4th of October 2021 till 31st of March 2022. So if you calculate October 27 days, November 30 days, December 31, January 31, February 28. I've just checked whether it is a leap year or not, and March 31st. So calculate how many number of days? 27 plus 30 plus 31 plus 31 plus 28 plus 31. It comes to 178 days. Or you can take here 1, 2, 3, 28 days during the August. So it comes to 179 days. 179 days. So here, since the asset was put to use for less than 180 days, the asset was put to use for less than 180 days. Only half depreciation will be allowed. Half depreciation will be allowed. The answer is, sir, for your kind information, for this particular problem, all these calculations not required. All these calculations not required. Why, sir? Sir, the 180 days condition is applicable only for the year of acquisition, not for the year of put to use. Right, sir? Only the first year of such asset, you need to see whether it is put to use for more than 180 days or less than 180 days. From second year onwards, you can claim full depreciation on such asset. You can claim full depreciation on such asset, irrespective of the fact whether it is put to use for less than 180 days or more than 180 days. Every one of you following or not, Amma? See, the asset was purchased during the previous year 2021. This is its first year and this is its second year. So from second year onwards, you can claim full depreciation directly. You can claim full depreciation directly, and there is no need to verify whether it is put to use for less than 180 days or more than 180 days. Every one of you following now? Clear? Next. Another motor vehicle B for rupees 3 lakhs on 19th of Feb 2021 and put to use from 3rd of September 2021. So this is also same case, purchased during the year 2020-21 and put to use from 21-22. Motor vehicle B for 3 lakhs. Motor vehicle B for rupees 3 lakhs. So date of acquisition, when it was purchased, 19th of Feb 2021, 19th of February 2021. So that means during the previous year 2020-21. Date of acquisition or date of put to use, and we started using it from 3rd of September 2021. 3rd September 2021. So that means during the previous year 2021-22. 21-22, every one of you. See, this becomes the first year of the asset and this is the second year of the asset. So where you can claim full depreciation. Absolutely no problem, irrespective of the number of days used in that year. Okay, now next. Mr. A took a vehicle loan of rupees 5 lakhs at 10% per annum and acquired motor vehicle C for rupees 5 lakhs on 31st of May 2021 and put to use from 30th June 2021. Okay, now motor vehicle C, he purchased one more motor vehicle C. Date of acquisition, purchased on when, 31st of May 2021. So that means during the previous year, 2021-22, and date of put to use, we started using it from 30th June 2021, 30th June 2021. So that means the same previous year, 2021-22. So acquired and put to use from the same previous year only. Now you have to see the 180 days condition. See, from 30th June, it started using only. So July, August, September, October, November, December, January, February, March, 9 months. 9 months it was used. 9 months into 30 days, 270 days approximately, and more than 180 days. The asset is put to use for more than 180 days. So we can claim full depreciation. Full depreciation we can claim. Okay, now for this, first of all, this asset was purchased by taking a loan on it. By taking a loan. So Mr. A took vehicle loan of rupees 5 lakhs at 10% per annum. At 10% per annum. Okay, now. So cost of the vehicle or purchase price of the vehicle, rupees 5 lakhs, add interest paid up to the date of put to use. Up to the date of put to use. We have already learned that as per the provisions of section 32, we have learned that if any asset was acquired by taking a loan, whatever the interest amount we are paying on such loan up to the date of put to use, such interest amount should be capitalized. Capitalized means what? Capitalized means adding to the cost of the asset, adding to the original price of the asset. And okay, now so that means the loan amount is 5 lakhs into rate of interest 10%, the rate of interest 5 lakhs at 10% per annum. And when the asset is started using on the 30th June 2021. So 5 lakhs is a loan amount into 10% is the rate of interest into for 3 months, April, May, June. July onwards, we started using on it. So for 3 months, 3 months interest should be capitalized on it. So 5 lakhs into 10% into 3 by 12. It will be 12,500. Now, the original cost of the asset becomes, or the revised purchase price becomes 5 lakhs 12,500 rupees, on which you have to claim the depreciation on it. Depreciation should be claimed at the rate of 15%. Not on 5 lakhs. On 5 lakhs 12,500, you need to claim depreciation, sir. Okay, now next. On 30th July 2022, same vehicle C was sold for 5,50,000 and reacquired it back on 28th of August 2022 for 6 lakhs. So on 30th July 2022, this vehicle sold for how much only? 5,50,000. Am I right? 5,50,000 and reacquired it back on 28th of August 2022. On 28th of August 2022, reacquired. The same vehicle got reacquired. The same vehicle got reacquired for how much only? It is reacquired for 6 lakhs. Reacquired for 6 lakhs. Okay, now. Sir, in our books of account, what will be the actual cost? After we reacquired the same, should I record the value of such asset as 6 lakhs rupees? No. Here, the actual cost should be calculated as per the provisions of section 43(1). Actual cost as per section 43(1). It will be the written down value of such asset at the time of transfer. At the time of transfer. What is the written down value at the time of transfer? See, for these purposes, you need to calculate the depreciation and you need to deduct it from here. See, you can see here the original cost we have decided 5,12,500 and depreciation at the rate of 15%. 5,12,500 into 15%, which comes to 76,875. Okay, now, so the written down value at the time of transfer should be 5,12,500 is the original cost minus 76,875. So the written down value at the time of transfer 5,12,500 minus 76,875. 4,35,625. 4,35,625 or reacquisition cost. Reacquisition cost. At what price you reacquired that asset? At 6 lakhs now. At 6 lakhs now. Now among these two, whichever is lower should be the actual cost. So therefore, actual cost of the asset. So after reacquiring the same asset, we need to capitalize that in our books of account at value of 4,35,625. Clear everyone? Okay. Now, assuming the above mentioned assets are the only assets in the block of assets for Mr. A, what would be its total depreciation? What would be its total depreciation claim under section 32 for the previous year 22-23? So only for the current previous year, we are asked to find out the depreciation, sir. Okay. But sir, for the finding out of the current year depreciation, first we should know what is the opening return on value as on 1/4/2022. Then only you can find out the current year depreciation now. See, in the problem, we don't have the information of opening return on value as in 1/4/2022. Yes or no? So we need to find first the opening return on value as in 1/4/2022. Then we can find out the current year depreciation. Okay. So the question is about calculation of depreciation for the previous year 2022-23. Particulars amount in rupees. Particulars amount in rupees. So first, let us take all the original costs, right? Now, we need to start calculating from the previous year 21-22 onwards. Even though some of the assets purchased during the year 2021, they are not put to use on the same year. They started using from 21-22 onwards. So, we need to start with from the previous year 21-22 onwards. Okay, now. So, total number of vehicles we got. The opening return on value as on 1/4/2021. As on 1/4/2021. So you can check out totally we have 3 vehicles and motor vehicle A, which is purchased for 4 lakhs. Motor vehicle A purchased for 4 lakhs. And motor vehicle B purchased for 3 lakhs. And motor vehicle C actual cost we already find out 5,12,500. So these will becomes the opening return on values as on 1/4/2001. Okay now. So four lakhs plus 3 lakhs plus 5,12,500. The opening return value becomes 12 lakhs 12,500. 12 lakhs 12,500. Okay, mom. Now minus depreciation at the rate of 15%. So 12 lakh 12,500 into 15%. 1 lakh 81,000 1,81,875. If you deduct it, you'll get 1030. So that means 10 lakhs 30,625. This will be the closing return on value for previous year 21-22, which will become the opening return on value for previous year 22-23. This is the closing return on value as on 31st of March 2022. Okay, now for the current previous year, that is during the previous year 22-23, opening return on value as on 1/4/2022, 10 lakhs 30,625. Do we have any additions? Yes, sir. Add additions made during the previous year. Excuse me. Add additions made during the previous year. Yes, we have one addition, right? We have reacquired motor vehicle C. What is the reacquisition cost? We have already calculated 4,35,625. 4,35,625. So 10,030,625 plus 435,625, 14,66,250, 14,66,250 minus sale value of the assets sold during the previous year. Sale value of motor vehicle C. At what price we have sold it, Amma? We have sold it for 5,50,000. Sold for 5,50,000. 5,50,000. So if you deduct it, you will get what, Amma? You will get depreciable value. That means on which we can apply the rate of depreciation in order to find out the current year depreciation. Minus 5,50,000, you will get 9,16,250. 9,16,250 minus current year depreciation. Current year depreciation at the rate of 15%. So 9,16,250 into 15%. 1,37,000. 437.5 is given. So if you round it off, 438. Now you'll get what, Amma? You'll get closing return on value. Closing return on value as on 31st of March 2023. How much you are getting in a 7,78,000. 7,78,812. Okay, now, and in the question, we are asked to find out the current year depreciation, that is 1,37,438. So 1,37,438 is given, option C. So 8C is the answer. 8C. 1,37,438. And how did you get this? Through this long calculations. In order to find out the current year depreciation for 22-23, first we should find out the opening return on value. In order to find out the opening return on value, first you should find out 21-22's depreciation. Because in the problem, it was not directly given. It was not directly given, sir. Opening return on value as on 1/4/2022 is this much. Not directly given. We have find out everything under. This much of long calculations will give you the answer for MCQ number 8. Every one of you following now. Right? So all the 8 MCQs from the RTP May 2023 income tax subject completed. Clear? In the next session, we will start with the question number 9. 9 onwards, it is descriptive questions. Question number 9 onwards, descriptive questions. Clear? So winding up the session here. In the next session, we'll continue here with the question number 9. So till then, have a good day and good night, sir. A very good morning, students. Welcome to the Straight Start Taxation classes. So we are discussing RTP May 2023 taxation paper. So in the last session, we have completed up to question number 8. First, all the 8 questions are MCQs we have completed. Now let's continue with the question number 9. Mrs. Roma, an Indian citizen, is a government employee working for the Indian government. So she is a government of India employee, sir. She submits the following information for the previous year ending 31st March 2023. Salary income received in Malaysia for the services rendered there. So 2 lakhs rupees. Profits from business carried in Orissa. Loss from business carried in Baroda. Profits from business carried on Paris. Income is earned and received in Sydney and business is controlled from Paris. Loss from business carried in Canada. Though profits are not received in India, business controlled from Dehradun. Unabsorbed depreciation of business in Canada. Profits from Indonesia business controlled from Delhi, out of which 60% profits deposited in a bank in Indonesia and 40% received in India. Rent from house property situated in Canada and received in Canada. Okay. Determine the gross total income of Roma for the assessment year 23-24, ignoring the provisions of section 115 BAC and the assumption that she is resident but not ordinarily resident in India and non-resident. So under these two residential statuses, we are asked to determine the gross total income of Mrs. Roma. Okay, sir. So from here onwards, for every question, you will be having the answer in the RTP itself, a detailed answer. So let's discuss from the RTP itself. So computation of the gross total income of Mrs. Roma for the assessment year 23-24. So first one, there are two different residential statuses under which we asked to find out the gross total income. Situation 1, she is resident but not ordinarily resident, and situation 2, non-resident. Okay, sir. So first, look at the incomes given, Amma. What is the first one? Salary income received in Malaysia for the services rendered there. So where a government employee working outside the India, right? And she's working on behalf of the government of India. Yes or no? See, different foreign countries embassies we have in India. Similarly, in different foreign countries, our Indian embassy offices will be there. Indian embassy offices, consular offices, Ministry of Foreign Affairs, right? Different security wings like RA. Okay, ma'am, right? So here, even though she is working in Malaysia and receiving the salary there, since she is working on behalf of a government of India, now as per the provisions of section 9, this income received by Mrs. Roma is deemed to be accrued or arised in India. Income deemed to be accrued or arised in India. Any income deemed to be accrued or arised in India, the nature will become the Indian income. Since the nature is Indian income, it will be fully taxable in the hands of all categories of associates, irrespective of their residential status. Whether they are a resident, a non-resident, resident but not ordinarily resident, irrelevant, amma. As long as the income earned by you is an Indian income, your residential status is irrelevant. It is fully taxable in your hands. So in both the cases, you can take 2 lakhs rupees. Resident but not ordinarily resident, non-resident. You can find the same thing in the note number 1 also. Income from salaries payable by the government to a citizen of India for services rendered outside the India is deemed to be accrued or arise in India, as per the section 9(1) clause 3. Standard deduction under section 16(1)(a) is allowable irrespective of residential status. Following, sir, every one of you. So that's why. So gross salary 2 lakhs less standard deduction under clause 16(1)(a) 50,000 minus, then net taxable salary income 1,50,000. Okay, ma. Now moving on. Second one, profits from business carried on in Orissa. in India. The place of accrual in India, the nature will become what, Amma? Indian income. Since the nature Indian income, it is fully taxable in the hands of resident but not ordinarily resident, non-resident. In both the categories, it will be fully taxable. Okay, sir, every one of you. Next, loss from business carried on in Baroda. Again, place of accrual in India, right? It become an Indian income. Of course, you have a loss here, and this loss you can set off from this particular income. Absolutely no problem, sir. So that's why we have considered this 20,000 loss also. Okay, sir. You cannot set off this loss with salary income. You cannot. But you can set off with business income. Absolutely no problem. Okay, now. Next. Profits from business carried on in Paris, outside the India. Income is earned and received in Sydney. So the place of accrual, place of receipt, both are outside the India. And the business is also controlled from outside the India. So this becomes foreign income. And foreign income not taxable in the hands of the resident but not ordinarily resident, and as well as non-resident. So in none of the cases we have not considered. Okay, now 0 0 profits from business carried on in Paris, because the income earned and received in Sydney and the business is controlled from Paris. Since it is accrues or arises outside the Indian, and nature become foreign income. Foreign income is taxable only in the hands of the resident and ordinarily resident. Yes or no? Next, loss from business carried on in Canada, place of accrual outside the India. Though the profits are received in India, profits are not received in India, the business is controlled from Dehradun. So the business is being controlled from India, sir. It will be taxable in the hands of the resident but not ordinarily resident. In the hands of the resident but not ordinarily resident, only two foreign incomes are taxable. Yes or no? What are they, Ma? Number one, business controlled from India, an income from a business which may be carried on outside the India, but that is controlling from India. And number two, professions set up in India. In both of these cases, the foreign income is taxable in the hands of the resident, but not ordinarily resident. Okay, ma. So you can see here. So this 46,000 loss considered in the category of resident, but not ordinarily resident. And in the hands of the non-resident, only Indian incomes are taxable. Foreign incomes, you simply ignore in the hands of the non-residents. So that's why we have not considered here. Next. Unabsorbed depreciation of business in Canada, right? Unabsorbed depreciation, you can claim, Amma, 16,000 rupees, right? So which you can be set off with respect to this profits. Unabsorbed depreciation, you cannot set off with respect to salary income. But unabsorbed depreciation can be set off with all other heads of income. See, you have 80,000 profit, Amma. 80,000 profit. From this 80,000 profit, right, sir? So 20,000, this loss you can set off. Still you have 60,000 profit. And you have another 46,000 loss. Still you have 14,000 profit. Still you have 14,000 profit. Sir, but I have 16,000 loss, kada. Don't worry, Amma, you have one more profit under it. You have one more profit. So set off 14,000 and absorb depreciation here. So the profits from business carried on in Orissa will become 0. Right, sir? Next one also there, Amma. Next one you can see. Profit from Indonesia business controlled from Delhi. Since it is controlling from India, the entire amount of the profits taxable in the hands of the resident but not ordinarily resident. So 70,000 I have taken under. 70,000 I have taken. Okay, now. So out of the 16,000 loss and absorbed depreciation, 14,000 you have set off already here. Now the remaining 2,000 you can set off from this 70,000. Still you have 68,000 profits. Right, sir? Next. Sir, what about the profits from this Indonesia business? Will it be taxable in the hands of the non-residents? So first of all, you can see here the place of accrual outside the India. Right, sir? And 60% of the profits deposited in a bank in Indonesia. So 60% of the profits you're receiving outside the India. So out of this 70,000 profits now, 60%, which means 42,000 nature becomes foreign income, FI, foreign income, and the remaining 40%, which means 28,000 Indian income, because the 40% received in India. So this 28,000, you can be taxable in the hands of the non-residents. This 28,000 Indian income, sir. See, whatever we are taxing here in the hands of the non-resident, this is all Indian income money. For your kind information, you can check out. This is income deemed to be accrued or arised in India. And this is profits from a business carried on in Orissa, Indian income, Baroda, Indian income. Yes or no? See, something is taxable in the hands of the non-resident, that means it is an Indian income. This 28,000, since 40% of the profits are receiving in India, this is Indian income. Clear now? Next one. Rent from house property situated in Canada, place of accrual outside the India, and received in Canada. Place of receipt is also outside the India. Since both the place of accrual and place of receipt outside the India, it is a foreign income, sir. Since it is a foreign income, it is neither taxable in the hands of non-resident, not taxable in the hands of resident, but not ordinarily resident. So that's why you can see nil. That's it. So find out the gross total income, sir. Every one of you. Take the calculator and do the calculations. So when it comes to when Mrs. Roma is a resident but not ordinarily resident, so she's having income from salary 1,50,000 plus 80,000 plus minus 20,000 loss minus 46,000 loss minus 16,000 loss plus 70,000 profits, 2,18,000. Next, when she is a non-resident, 1,50,000 salary income plus 80,000 business income minus loss from business 20,000 and plus profits from business 28,000, 2,38,000. Her residential status went non-resident. So when she is a resident but not ordinarily resident, 2,18,000 is the income. Non-resident, 2,38,000 is the income, sir. Clear, everyone? So that's the answer. Please check it out and ask the doubts if any. So there is a note point is also given. The same, the explanation which I have given, the same explanation is provided here and there. Okay. Check out the answer and ask the doubts if any, sir. Done? Now, moving on to the problem number 10. Mr. Akash owns a residential house property whose municipal value, fair rental value, and standard rent are 1,60,000, 1,70,000, 1,90,000 respectively. So that means first one, municipal rental value. Municipal rental value given how much? 1,60,000. And then second one, fair rental value. Fair rental value given how much? 1,70,000. And third one, standard rent. Standard rent given 1,90,000. Okay. The house was two independent units. Unit 1, 25% floor area is utilized for the purpose of his profession. And unit 2, 75% floor area is let out for residential purposes at a monthly rent of 8,500 per month. So actual rent given how much? Actual rent given 8,500 per month. Municipal taxes, 8% of the municipal rental value were paid during the year by Mr. Akash. So municipal taxes paid. It is 8% of municipal rental value. What is municipal rental value? 1,60,000. So 1,60,000 into 8%. How much it will be? 1,60,000 into 8%. 12,800. Next. He made the following payments in respect of the house property during the previous year, 22-23. Light and water charges, it is 2,000 rupees. Repairs for 1,45,000. Interest on loan taken for the repairs of the property, 36,000. right? Akash has taken a loan of rupees 5 lakhs in July 2016 for the construction of the house property. So there are two loans taken only. One for the repairs. This is the first loan for the purpose of repairs of the house property. The interest paid 36,000. This is the second loan where the principal value 5 lakhs. The date of borrower July 2016 and the purpose is construction. Construction was completed on 30th June 2019. So date of completion of construction given 30th June 2019. He paid interest on loan at the rate of 12% per annum and every month such interest was paid. No repayment of the loan has been made so far. The entire amount of the principal is outstanding. Income of Mr. Akash from his profession amounted to 8 lakhs during the year without debiting the house rent and other incidental expenses, including admissible depreciation of 8,000 on the portion of the house used for profession. Determine the gross total income of Mr. Akash for the assessment year 23-24, ignoring the provisions of 115 BAC. So he is not opted for any concessional rates of taxes under. He is paying the taxes under regular scheme. All the deductions, all the exemptions he is entitled to. Okay, now. So we asked to find out the gross total income. But if you look at here, he's having only two incomes under. One, house property income. Two, professional income. Clear? Now, let's come to the answer. Here it is, the answer given. Computation of the gross total income. Computation of gross total income of Mr. Akash for the estimate year 23-24. Now, first, let us find out the income from house property. Okay, no, sir, every one of you. Now, so here we have given the house property as 2 units and 2 units. Unit 1, 25% is for the professional purposes he is using under. Let us say this is the house property. Right. Let us assume the 75% portion, this 75% portion let out and 25% portion is using for professional purposes, for his own profession, Now first let us find out the unit 2 income which is let out. So do you remember the format for the calculation of income from house property? Gross annual value minus municipal taxes paid during the current previous year. That will give you net annual value, less deductions under section 24. First one, standard deduction, which is always 30% of NAV. Second one, interest on loans. Then you will get the income from house property. So gross annual value. Sir, how to find out the gross annual value here? So very simple calculation, which I would like to explain with the help of the running notes. Come to the running notes, everyone. Problem number 10. So working notes number 1. Calculation of gross annual value. Okay, sir. Step number 1. What is step number 1, sir? It is the comparison between fair rental value and municipal rental value. And fair rental value, how much given, sir? Fair rental value 1,70,000. 1,70,000 is for the entire house property, but we are calculating only with respect to 75%. Unit 2, 1,70,000 into 75%. 1,27,500. 1,27,500. Then municipal rental value 1,60,000. Okay, ma. So municipal rental value 1,60,000 into 75%. 1,60,000 into 75%. So it will be 1,20,000. So among these two, you have to take whichever is higher. The higher value is 1,27,500. Now step 2, step 1 value. Step 1 value 1,27,500 should be compared with what amount? Standard rent. Standard rent how much given, sir? Standard rent given 1,90,000. 1,90,000 into 75%. 1,42,500. Now among these two, we have to take whichever is lower. The lower value is again 1,72,000. Sorry, 27,500. This should be treated as what amount? Expected rent. Expected rent. Now step number 3. Expected rent should be compared with what, sir? Expected rent should be compared with the actual rent. Actual rent received or receivable, which is 8,500 per month kada. Actual rent 8,500 per month. Okay, ma. So 8,500 per month into 12 months. The question is silent about the vacancy of the property. So that means the property was let out for 12 months. So 8,500 into 12 months, 1,02,000. Sir, here you can see the actual rent of the property is lower than expected rent. Sir, do we need to verify the applicability of section 23(1)(c) here? Section 23 subsection 1 clause C. Answer is no, not required. Because the question is silent about the vacancy of the property. Since the property was never vacant during the current previous year, the provisions of section 23(1)(c) not applicable. Straight away you can go ahead with the expected rent as your gross annual value. So therefore, gross annual value is equal to 1,27,500. 1,27,500. If the question said the properties was remained vacant for 2 months or 3 months, then you have to verify the applicability of section 23(1)(c). The question is silent about the vacancy period. So that means the property was let out for 12 months. Now you can see here gross annual value 1,27,500. That is what we got now. Now coming to the municipal taxes paid during the current previous year, the total municipal taxes paid how much, amma? 12,800. But since we are calculating the house property income only for 75% of the floor area, so into 75%. So 1,60,000 is your municipal rental value. This is the percentage is given, and this is for the unit 2 portion only, which is 75% floor area. So 1,60,000 into 8% into 75%, 9,600. If you deduct amma, you will get what, sir? You will get net annual value, which is 1,17,900. Okay, now into 30%, you will get standard deduction 30%, 35,370, which is always equal to 30% of NAV. Okay, now 35,370. Then interest on loans. Interest on loans. See, for this problem, interest on loan calculation is very, very important. Clear? Because here we have two loans. First loan is taken for the repairs of the house property. Second loan is taken for the construction of the house property. Clear, sir? Every one of you. Now, interest on loan, we got the note point calculation. Here it is, calculation of the interest on loan. So the interest for the year, for the purpose of the construction of the property, you have taken 5 lakhs loan, where the rate of interest is given 12%. So the total interest paid during the year 60,000. 60,000. This is your current year interest only. Current year interest. Okay, next, pre-construction period interest. Pre-construction period interest. Why, sir, we need to calculate pre-construction period interest here? Why we need to find out? Very simple, sir. When the loan was taken, the loan taken July 2016. July 2016. When the construction completed, 30th June 2019. So that means during the Previous year 2019-20, the construction completed. And pre-construction period interest allowed as deduction over a period of 5 years, starting from the previous year in which construction completed. In which construction completed? Construction completed during the previous year, 1920. From here onwards, 5 years. So 1920, 2021, 21-22, 22-23, and 23-24. From the previous year 1922 till the previous year 23-24, you can claim pre-construction period interest. And what is our running previous year? 2022-23. That's why we need to calculate pre-construction period interest here. Every one of you following now, right? Next. So that's why here the pre-construction period interest is taken. And now how this amount of 33,000, this one, everything, how did this came? So let me explain you this with the help of the notes. And working notes number 2. For your reference, I'm giving this working notes only. Working notes number 2, calculation of pre-construction period interest. Do you remember the steps, ma? Step number 1, calculation of PCPI. First, we should find out, PCP, pre-construction period, we need to find out. Pre-construction period always starts with date of borrowal of the loan, date of borrowal of the loan, and ends with 31st March, immediately preceding to the date of completion of construction, DOCC, date of completion of construction. Actually, the pre-construction period interest ends with the 31st March immediately preceding the DOCC or date of the repayment of the loan, whichever is earlier. But the question said clearly, no repayment has been made so far. The entire loan amount is outstanding. So that's why I am completing the pre-construction period with 31st March. Now, what is the date of borrowal of the loan? It said the loan was taken in the month of July 2016. Yes or no? Sorry. Yeah, July 2016. Akash taken a loan of 5 lakhs in July 2016. So it starts with the 1st of July 2016 and ends with, what is the date of completion of construction, Amma? The date of completion of construction given 30th June 2019. Yes or no? 30th June 2019. Check it out. The construction completed on 30th June 2019. Now, what is the 31st March prior to this particular 30th June? And what is the 31st March prior to this date? Prior to this date, what is the 31st March? It will be 31st March 2019. Yes or no? So the PCP ending with the 31st March 2019. Clear, sir? Now, how many months time period it is? Now, during the previous year 16-17, it will be July to March, and 9 months. Previous year 17-18, 12 months. Previous year 18-19, 12 months. Totally 33 months. And if you calculate, you will get 33 months as pre-construction period. Okay. Now, step number 2. What is step number 2, sir? Calculation of pre-construction period interest. Pre-construction period interest is equal to loan amount 5 lakhs into rate of interest 12% into pre-construction period 33 months. 33 months. So it will be 5 lakhs into 12% into 33 months. 33 months divided by 12 kada. So 1,65,000. 1,65,000. 33 months. So that is why divided by 12, I have done it. And okay, now every one of you. See, 33 months divided by 12 one day, you will get around 2 years, 9 months. That is what our pre-construction period interest now. Every one of you. 2.75, that means 2 years, 9 months. And 0.75 into 12 and you will get 9 and 2 years, 9 months. That is what our pre-construction period. So for this pre-construction period, we are paid an interest of 1,65,000. Now, can I get this 1,65,000 amount of interest entirely in a single previous year as deduction? No. This will be allowed as deduction over a period of 5 years. Starting from the previous year, 2019-20. Why? It is the previous year in which your construction completed, and up to the previous year, 2023-24. 5 years kada. 19-20, 20-21, 21-22, 22-23, 23-24. Okay. Next. Step number 3. Calculation of pre-construction period interest per annum for every year. So PCPI per annum is equal to 1,65,000 is the total pre-construction period interest we have paid divided by 5. 1,60,000 divided by 5. So per annum you can claim a deduction of 33,000. Clear, sir? Every one of you. So that's your pre-construction period interest on it. 33,000. Get it? And this is interest on loan taken for the purpose of repairs of the house property. Since the property is a let out property, there is no restriction on it. Right? If it is happen to be a self-occupied, the deduction restricted to 30,000 only now. It is a let out property, entire 36,000 you can take. Clear, sir? So this is your current year interest. This is PCPI and this is interest on loan taken for repairs only. So what is the total interest paid by you? 60,000 plus 33,000 plus 36,000, 1,29,000. This is with respect to the entire house property and entire house property. But I want only for 75% because I am calculating the income for only unit 2, which is 75% of floor area. So 1,29,000 into 75%, 96,750. Clear, sir? That is your interest portion. 96,750. This is of you got 96,750. Now total deduction under section 24, 35,370 plus 96,750, 132, 120. The total deductions under section 24 minus 170,900 is your NAV. So you have a loss from house property 14,220. You have a loss under 14,220. You have a loss. Okay. Next. He's also having a profession now, from which he got a professional income of 8 lakhs under. This is before claiming any deductions. Now let us claim the deductions. So whatever all the expenses incurred towards the house property, 25% he can claim out and out, because 25% of the house property is using for profession. So light and water charges, he can claim 25% out of it. Repairs, out of which 25% he can claim. Right. So interest on loan taken for the repairs, out of this interest also he can claim 25%. Okay now. So see here, light and water charges, 25% of 2,000. Right. That will be, light and water charges 2,000 gadama. 25% comes out to be 500 and 500. Next, municipal taxes, total municipal taxes by 12,800. 25% you can claim. Repairs, 25% you can claim. Interest on loan taken for repairs, 36,000 kada, out of which 25% he can claim. And now interest on loan taken for the construction of the house property. What is the current year interest? 60,000, out of which he can claim 25%. And depreciation, 8,000. Depreciation directly given kadama. Depreciation, 8,000 rupees. So these are all the expenses total amma. Light and water charges 500. Municipal taxes 3,200. Repairs 36,250. Interest on loan taken for the repairs 9,000. Interest on loan taken for construction 15,000. Depreciation 8,000. 71,950. And deducted from the professional income 8 lakhs. It will be 7,28,050. Professional income 7,28,050, and out of which you can set off this house property loss. And house property loss can be set off with all the other heads and including income from salaries. Yes or no? So this loss of 14,220 adjust for this 7,28,050. So you are getting 7,13,830 as your gross total income. 7,13,830 as gross total income. So that's the answer for the problem number 10, sir. Check it out, everyone, and ask the doubts if any. Completed, sir. Now let's moving on to the next problem. Problem number 11. Mr. Suresh, a sole proprietor, has a sole proprietary manufacturing unit. On 1st of April 22, he owns plant A and plant B. The rate of depreciation given 15%. Depreciated value of the block as on 1st of April 22, rupees 10 lakhs. Opening return on value of the block. Opening return on value of the block given how much amount? 10 lakhs. Opening return on value of the block given 10 lakhs. Where we are having two machines, plant A and plant B. Plant B transferred on 15th of October 2022 for 19 lakhs. So out of the two plants, plant B got sold only for 19 lakhs. Expenditure on transfer of plant B 20,000, irrelevant. Plant C, rate of depreciation 15%, purchased on 10th March 2023 for 22 lakhs. See, when it was purchased on 10th March 2023. Okay. However, plant C is put to use on 2nd of September 2023. See, it was purchased. The date of acquisition purchased during the previous year 2022-23. However, put to use during the previous year 2023-24. So that means for the previous year 2022-23, no depreciation will be allowed on plant C. On plant C, you neither allowed to claim normal depreciation nor allowed to claim additional depreciation. So why the additional depreciation comes into the picture here? Because assessee engaged in the manufacturing operations. Those who are engaged in the business of manufacturing or production activities, they are eligible for the additional depreciation on new plant and machinery purchased. Since plant C is a new plant and machinery, and assessee engaged in the business of manufacturing, he is eligible for additional depreciation. However, since plant C was never put to use during the previous year 22-23, he is not allowed to claim, neither allowed for additional depreciation nor for normal depreciation. So you can simply ignore plant C for depreciation purposes. Business income of Mr. Suresh before claiming any depreciation 11 lakhs. Okay. On 1st March 2023, Suresh transfers 900 equity shares in AA Limited, unlisted shares and right, for 23,50,000. Suresh does not own any other residential house property. The shares were purchased on 2nd of April 2015 for 2 lakhs. You can see the date of acquisition 2nd April 2015 and date of transfer 1st March 2023. And they almost hold for 8 years and approximately 8 years the shares were held by Mr. Suresh. So the nature becomes long-term capital assets. So whatever the unlisted shares transferred, they are long-term capital assets. Okay now. To avail the benefit of exemption under different sections, he has made the following investments on 1st of May 2023. What investments he made? And he purchased a residential house property at Kolkata for 19 lakhs, out of which the stamp duty expenditure was 30,000. Out of which, okay, NHAI wants 3 lakhs. Next, find out the gross total income of Mr. Suresh for the estimated year 23-24, and we provided with the cost inflation indices as well. Clear, sir? Now let us start problem number 11. Here it is, problem number 11. Combination of gross total income of Mr. Suresh for the assessment year 23-24. So first, PGBP is having two incomes here. One PGBP, two capital gains. First, let us find out the PGBP income. So PGBP income is given directly 11 lakhs rupees before claiming depreciation. Yes or no, Amma? Business income, yeah, somewhere it is given. Before claiming any depreciation, 11 lakhs. So PGBP, business income, 11 lakhs rupees. Now, let us find out the current year depreciation. Okay, now, this is before claiming depreciation, Gada. Before depreciation. So we can claim depreciation out of it. So depreciated value, the opening return on value given 10 lakhs rupees. Every one of you. Okay. That I've already noted down here. Opening return on value 10 lakhs. And add the actual cost of the plant C. Right. 22 lakhs is a plant C you purchased for 22 lakhs. And plant B sold for 19 lakhs. So you can find out the return on value as on 31st of March. Depreciable value as 13 lakhs. Right, sir. Now, coming to the calculation of depreciation. Sir, you can see here the depreciable value you are having only 13 lakhs only. Now, this entire 13 lakhs you need to allocate to plant C. Sorry. The newly acquired asset. Since the depreciable value is lower than the total of opening return on value and additions, whatever the value left over in the block, that should be treated as the value of the new asset. That is what we learned, Gada. That is what we have learned in our regular classes. So the entire 13 lakhs should be treated as the value of the new asset. And the new asset never put to use during the current previous year. That's why normal depreciation 0, additional depreciation 0. Okay, so the current year depreciation 0, the business income after claiming depreciation will be 11 lakhs rupees. Clear? Next, coming to the capital gains. Long-term capital gains on transfer of unlisted equity shares. Since the shares were held for more than 24 months, it is a long-term capital asset. What is the sale consideration, sir? It was sold for 23,50,000. Okay, 23,50,000. And then less index cost of acquisition. The original cost acquired for 2 lakhs and 2 lakhs into CII for the year of transfer divided by CII for the year of acquisition. 2 lakhs into 331 divided by 254. So the index cost of acquisition 2,60,630. Deduct it, ma. 20,89,000. Excuse me. 20,89,370. Okay, ma. Every one of you. Right now. So this is your gross long-term capital gains. This is your gross long-term capital gains, out of which you can claim exemption under section 54 EC. Sir, why 54 EC comes into picture here? Because he invested in NHAI bonds, National Highway Authorities of India. But sir, under section 54 EC, if you want to claim the exemption benefit, the asset transferred must have been either land or building or both. But what is asset transferred here is unlisted shares. So that's why 54 EC exemption nil. So deduction under section 54 EC is allowable only in respect of long-term capital gains on transfer of land and buildings. Now 54F. Why 54F comes into picture? You also invested in residential house property. For the applicability of the 54F, the asset must be transferred any asset other than house property. Yes or no? You have to transfer any capital asset, any long-term capital asset other than residential house property. However, the asset to be invested in a residential house property, the amount should be invested in a residential house property. So what is the asset transferred? Unlisted shares other than house property. What is the asset in which invested? Residential house property. 54F applicable, satisfied. Okay, now coming to here, 54F exemption. 20,89,370. That is your gross long-term capital gains. 20,89,370 into the amount invested. How much you invested, Amma? 19 lakhs kada? 19 lakhs. Sir, this 30,000 stamp duty value should be added back. No. This is the words. Observe the words and out of which. So that means this 30,000 is already forming part of this 19 lakhs. It is capitalized already, which was capitalized already. No need to add back again. So 19 lakhs, the amount of the investment you have made divided by net consideration. What is the net consideration, Amma? This 23,50,000. Right? How did you get the net consideration, Amma? Full value of consideration minus transfer expenses net consideration. Since no transfer expenses given, the full value of consideration, the sales consideration itself is treated as net consideration, 23,50,000. You remember the formula? If you reinvest entire amount of the net consideration, then only you will get an exemption of entire amount of capital gains. That is what we've learned now. So calculate, Amma, how much you are getting. 16,89,278. 16,89,278 is the exemption you are getting under section 54F. Deducted from your gross long-term capital gains. You are getting 4,92 rupees. So you have a long-term capital gains of 4,92 and you have a business income of 11 lakhs. So the total gross total income comes out to be how much, Amma? Gross total income 15,92 rupees. So that's the answer for problem number 11. Check it out, sir. Just go through it and ask the doubts if any. Done, sir? No. Moving on to the problem number 12. Mr. Ram, a resident individual aged 65 years, senior citizen, very careful, senior citizen, submits the following details of his income for the assessment year 23-24. So loss from speculative business A, 30,000 loss. Income from speculative business B, 1,50,000. So whether this loss can be set off here, answer is absolutely yes. Set off, we can set off. Right, loss from one speculative business can be set off with the profits from another speculative business. However, loss from speculative business cannot be set off with non-speculative business profits. Yes or no? Next, loss from specified business covered under section 3580. Right, so specified business losses. Now, can I set off this loss with this income? No. No. Specified business losses can be set off with specified business profits only. You cannot set off with speculative business profits. You cannot set off with non-speculative business profits. Next. So this loss of 20,000 simply carry forward to next year. Next. Income from salary computed. What is the meaning of this computed word putting here? The meaning is that the standard deduction of 50,000 already claimed, already deducted. After deduction of standard deduction only, this 2 lakhs you got in there. Okay. Loss from house property, 1,90,000. Now, can I set off with this income? Answer is absolutely yes. Loss from house property, we can set off with income from salary. Absolutely no problem. Loss from clothes business, 80,000. Sir, whether this loss of 80,000, now can I set off with this income from speculative business? Answer is absolutely yes, I can set off. It is a non-speculative business and non-speculative business. Non-speculative business loss can be set off with speculative business profits. Absolutely no problem. Next, long-term capital gains from the sale of urban land. Long-term capital loss on sale of shares, STT not paid. Sir, now this is also a loss here. Now, can I set off this loss with long-term capital gains of 3 lakhs? Answer is yes, I can set off. Long-term capital losses can be set off with long-term capital gains only. Next, long-term capital loss on sale of listed shares in recognized stock exchange. STT paid at the time of acquisition and at the time of sale of shares. So again, we have one more long-term capital loss. This 1,50,000. Now, can I set off this loss with the long-term capital gains of 3 lakhs? Answer is yes. Just now I've told you long-term capital losses can be set off with long-term capital gains only. Next. Income from betting, gross 80,000. Loss from gambling, 8 lakhs. Sorry, 8,000 rupees. Now, can I set off this loss with the income from betting? Both are casual incomes. Both are casual incomes activities only. Now, can I set off loss from gambling from the income from betting? Answer is no. Now, can I carry forward to next year? Answer is no again. Loss from betting, gambling, crossword puzzles, races including horse races, card games. These are all neither eligible for set off nor eligible for carry forwarding. Okay, now that will be lapsed. Interest on savings bank deposits, interest on fixed deposits, against which we can claim deduction under section 80 TTB, subject to a maximum of 50,000 rupees. Yes or no? Assess is a senior citizen. Do you remember? Assess is a senior citizen. So 80 TTB applicable and maximum deduction allowable 50,000 rupees. Next. Compute the total income of Mr. Ram and show the items eligible for carry forward, assuming that it does not offer provisions of 115 BSc. It's a very simple question, sir. Computation of total income of Mr. Ram. Income from salary, 2 lakhs, out of which loss from house property. I've already mentioned here. Right? Where it is, yeah, here. This one. This one. We can set off, I've already mentioned now, we can set off under 1,90,000. So 10,000 is net salary income. Then profits from business or profession. You have only profits from one business and there, here it is. Income from speculative business. This 1,50,000. Okay, now 1,50,000 against which the remaining losses you can carry set off under. This loss from specified business 20,000 you can set off, and this loss from cloth business 80,000 you can set off. This 20,000 and this 80,000 set off against that 1,50,000. 20 or 30. Oh, this is specified. This you cannot set off. Where it is 30,000. Yeah, this one only. This 30,000 you can set off here. This 80,000 also you can set off from this 1,50,000 only. Okay, now every one of you. So minus 30,000 minus 80,000, net income from business 40,000. After that, you have a long-term capital gains of 3 lakhs and 3 lakhs, against which this loss and this loss both to be set off under. Right? So long-term capital loss of 1 lakh, long-term capital loss of 1,50,000, set off net long-term capital gains 50,000. Now, income from other sources. He's having income from other sources. Income from betting 80,000. This loss cannot be set off, cannot be carried forward. And these two incomes also income from other sources. Interest on savings bank, interest on fixed deposits. 80,000, 12,000, 40,000, 1,32,000. So the gross total income, you can see salary income 10,000 plus business income 40,000 plus long-term capital gains 50,000. Here it is 1 lakh. 1,32,000. Totally 2,32,000 is your gross total income. Minus, I already mentioned you, 80 TTB 50,000 deduction. 80 TTB. Assess is a senior citizen. Maximum deduction 50,000. The total of interest income 52,000 under. But 52,000 not allowed as deduction. Under section 80 TTB, the maximum deduction allowable 50,000 only. Okay. So your total income 1,82,000. 1,82,000 is the total income, sir. And after that, loss from specified business, I've already mentioned, right? So this can be set up only with the profits from another specified business. Therefore, the loss of that particular such loss cannot be set up against any other income. The unabsorbed loss of 20,000 has to be carried forward. I've already mentioned kada ikkada. Carried forward. Loss of 20,000. Next. Loss from gambling can neither be set off nor can be carried forward. I've already mentioned kadamma. Loss from gambling, you cannot set off and you cannot carry it forward. That will be lapsed. Clear, sir? So that's answer for problem number 12. Go through it and ask the doubts if any. So in this session, we have completed problem number 9, 10, 11, 12. Now in income tax RPTP, totally we have given with 15 questions. Out of 15, 12 questions completed and 12 questions completed. In the next session, I'll complete the remaining 3 questions also. Okay, now. See you in the next session, sir. Bye. Very good morning, students. Welcome to the Shrestha Taxation classes. We are discussing income tax RTP for May 2023. In the last session, we have completed up to question number 12. Let's start with the question number 13. Examine and the tax implication of each transaction and compute the total income of Mr. Tushar, Mrs. Tushar, and their minor son for the assessment year 23-24, assuming they do not wish to opt for section 115 BAC. So we have provided with the 3 transactions. With respect to the 3 transactions, we need to see the tax implications. And at the same time, we also asked to find out the total income. First one, Mr. Tushar has a fixed deposit of 6 lakhs rupees in State Bank of India. He instructed the bank to credit the interest on deposit at 9% from 1st April 22 till 31st of March 23 to the savings bank account of Mr. Raj, son of his brother, to help him in his education. So who is having the fixed deposit here? Mr. Tushar having the fixed deposit. What is the interest on the fixed deposit he is getting? The principal amount is 6 lakhs rupees into rate of interest 9%. So which comes to 54,000 rupees. Interest he is earning. But he given the instructions to the bank that this interest amount should be credited to the savings bank account of Mr. Raj, who is not his son, who is the son of his brother. Sir, here whether the ownership in the fixed asset is getting transferred? No. The ownership in the fixed deposit is not getting transferred. Only Tushar is given the instructions to the bank to transfer only the interest, not the fixed deposit portion. So here the provisions of section 60 comes into the picture. Now, as per the provisions of section 60, if any SSE transferring income alone without transferring the asset, whatever the income so transferred, it will be clubbed again in the hands of the transferor. In our case, it is Mr. Tushar and taxable in the hands of Mr. Tushar. Okay, ma. Here, the fixed deposit amount is not transferred. Only the interest portion is transferred. Income getting transferred without transferring the ownership in the asset. Section 60 provisions applicable. Yes or no, ma? Every one of you. So, the entire interest of 54,000 taxable in the hands of Mr. Tushar. So, check it out. Interest on Tushar, fixed deposit with SBI. Taxable in the hands of whom, mama? Mr. Tushar, 54,000 rupees. Clear, everyone? Now, look at the second transaction. Tushar started a proprietary business on 1st of May 2022 with a capital of 6 lakhs. So, Tushar started a business with a capital of 6 lakhs. His wife, Mrs. Tushar, a software engineer, gave a cash of rupees 5 lakhs on 1st May 2022 on the same day on which the business was started by Mr. Tushar, which was immediately invested in the business by Mr. Tushar. right? So here you can see Mrs. Tushar also given a cash gift of rupees 5 lakhs to Mr. Tushar. And what Mr. Tushar done with that cash gift? He invested the same into his business immediately. Right, sir? Now, during the current previous year, he earned a profit of 4 lakhs rupees. Okay, ma. So, profit earned from the business 4 lakhs rupees. Now, the question is whether the entire 4 lakhs is taxable in the hands of Tushar. Answer is no. It will be taxable in the hands of Tushar and Mrs. Tushar in the ratio of 6:5. In the ratio of 6:5. That means the capital standings as on 1st May 2022, the day on which the business got started. Are you following, every one of you? Only the profits in relation to his own capital contribution, 6 lakhs rupees, taxable in the hands of Tushar. So you can check out here. Profit for the previous year 2022-23 apportioned on the basis of capital employed on the first day of the previous year, that is as on 1st of May 2022. So first day of the previous year means to be 1st of April 22 now. Here you are mentioning it as 1st May 2022. Why? Because the business started on 1st May 2022. And the profit should be apportioned between the ratio of 6:5. See, the total profit earned, how much? 4 lakhs. This is a total profit earned. And this profit you got with the capital of 11 lakhs rupees, not a capital of 6 lakhs rupees. Are you following now? For the total capital employed 11 lakhs, you got a profit of 4 lakhs in it. Right. So for 11 lakhs capital, 4 lakhs is a profit. For 6 lakhs capital, how much? So then make the calculations. It will be 6 lakhs into 4 lakhs divided by 11 lakhs. So how much you are getting, sir? It will be 2 lakh 18,182. So this is a profit portion attributable to the capital employed by Mr. Tushar. So that is why it is taxable in the hands of Tushar. Now, with respect to the capital contributed by his wife, not in the form of capital, actually she has given as a cash gift. And the same is immediately invested by Mr. Tushar in his business. Okay, now. So now this amount, how did this amount came under? Simple answer. For 11 lakhs capital, 4 lakhs is the profit. For 5 lakhs capital, what is the profit? Same again, 5 lakhs into 4 lakhs divided by 11 lakhs. Calculate everyone. You will getting 1,18,000. Sorry, 1,81,818. So this is a profit attributable to the cash gift given by Mrs. Tushar. Since this profit arising out of such cash gift, that will be clubbed in the hands of Mrs. Tushar, taxable in the hands of Mrs. Tushar. Yes or no, ma? Gift to spouse. Do you remember the provisions of clubbing provisions? Right? So taxable in the hands of Mrs. Tushar. Next, third transaction. Mr. Tushar's minor son derived an income of 20,000 rupees through a business activity involving the application of his skill and talent. See, generally, minor child income is subject to be clubbing in the hands of the parents. However, there are certain special cases where minor child income is not subject to clubbing. What are the special cases, Amma? Where the minor child earning income by application of his skill and talent, knowledge and attributes, and where that minor child is suffering with a specified disease. Yes or no? Under section 80 DDB 80U. Right. So here it was clearly mentioned, Mr. Tushar's minor son applied his skill and talent, whereby he earned an income of 20,000 rupees through business activities. Since it is an income earning out of his skill and talent, it is not subject to clubbing under. Not to be clubbed in the hands of the parents. It will be straight away taxable in the hands of his minor son. So look at it. So minor son, 20,000 rupees will be taxable in the hands of minor son. Yes, 20,000. Income of the minor son through a business activity involving the application is skill and talent. So in the case of the income earned by minor child on account of any activity involving the application of any skill or talent, then such income of the minor child shall not be included in the income of the parents, but shall be taxable in the hands of the minor child directly. Clear, sir? So that's it. The total income. So Mr. Tushar having only two incomes. Number one, interest on fixed deposit. Number two, business profits. Total it 54,000 plus 2,18,182. 2,72,182 is the total income. 2,72,182. And Mrs. Tushar and their minor child having only one income, the total comes to be 1,81,818 and 20,000 rupees. So that's the answer for the problem number 13. Check it out, sir. Now, moving on to the problem number 14. Mr. Kamal, a resident individual aged 48 years, working at a senior management position in a private bank, since past 20 years. During the previous year 22-23, he received the following emoluments from the employer. Basic salary per month, 3,50,000 per month. So that means per annum, 3,50,000 into 12 months. 3,50,000 into 12 months, 42 lakhs. Basic salary per annum. Client entertainment reimbursement of rupees 20,000 per month, out of which he submitted bills for 2 lakhs for the relevant previous year. So how much he is getting actually? Client entertainment reimbursement 20,000 per month only. So that means 2,40,000 per annum, out of which he is submitting the bills for the expenditure incurred 2 lakhs rupees. So that means only 40,000 taxable as this client entertainment reimbursement. See, the company given him 2,40,000 for the client entertainment Sunday. He incurred only 2 lakhs out of it. 40,000 is still with him. That will be treated as his income and taxable in his hands. Are you following or not, Amma? Every one of you. Expenditure to be exempted to the extent of the incurred. To the extent of the expenditure incurred. Yes or no? So he actually incurred 2 lakhs rupees. 2 lakhs will be exempted. The remaining 40,000 will be taxable. Clear, everyone? Next. Leave travel allowance of 4 lakhs per annum. He took a trip to Goa with his spouse and 2 children in December 22, for which the plane boarding tickets of 1 lakh and hotel bookings of 3 lakhs were submitted to the employer. See, how much LTC he got on the LTC he got? 4 lakhs rupees, sir. 4 lakhs. Right. See, when it comes to the leave travel allowance, only the expenditure towards transportation charges are allowed as exempted. Yes or no? Only the expenditure towards the transportation, lodging and boarding not allowed as deduction, sir. So the transportation expenses, how much minus transportation charges? 1 lakh rupees, sir. So the remaining 3 lakhs will be taxable here. Hotel bookings, lodging and boarding, food and stay, that is fully taxable, sir. Exemption not allowed. Only the expenditure incurred towards the to and fro charges is exempted. Next, performance bonus amounting to 20% of annual basic salary. What is your annual basic salary? 42 lakhs. So 42 lakhs into 20%, which comes out to be 8,40,000 fully taxable. Performance bonus fully taxable. Next, he eligible to take a staff housing loan up to 20 lakhs at a concessional rate of 2.5%. At a concessional rate of 2.5% per annum. He availed a housing loan of 15 lakhs out of the same on 1st of June 2022. No repayment of the loan has been made during the previous year 22-23. The lending rate of the SBI as on 1/4/2022 is 8% per annum. Now, what is the perquisite here? See, he is getting the concession with respect to rate of interest on it. So the perquisite with respect to rate of interest is equal to, had he taken the loan from the SBI, he would have paid 8% per annum as interest on it. 8% per annum as interest. But for company, he's paying only 2.5% as interest. So the benefit in the form of the interest comes out to be 5.5 percentage. 5.5 percentage. So now perquisite value is equal to the loan amount he has taken 15 lakhs into benefit in the form of interest 5.5 percentage into 10 by 12 because he has taken the loan on 1st of June 2022. Now for current previous year, he is going to pay the interest only for 10 months. So that means he is going to get the concession in the form of interest only for 10 months. So that's why 10 by 12. So the perquisite value comes out to be 68,750 rupees. 68,750 rupees. Concessional rate of interest. Okay, now next. The bank also allotted 1500 sweat equity shares to Mr. Kamal. 1500 sweat equity shares to Mr. Kamal in May 2022 at the rate of 1300 rupees per share. The fair market value of the shares 1500 rupees per share on the date of exercising of the option by Mr. Kamal. Now, what is the perquisite value here? The fair market value of the shares 1500 rupees per share. Am I right? Yes. But he got the same. He got the same only for 1300 rupees per share. So for every share, he is getting a benefit of 200 rupees that will be treated as here perquisite for every share. Right, sir? So that means for 1500 shares, what is the taxable value of perquisite? Taxable perquisite is equal to, it will be 1500 shares into 200 rupees per share. It will be 3 lakhs. Taxable under that income from salaries. Okay, ma'am. He sold all the shares for rupees 2,100. All the shares for 2,100 per share on 31st of March 2023 on a recognized stock exchange. Assume the STT has been paid. So you can see here, the allotment happened to him in May 2022 and he sold all the shares on 31st of March 23. So that means he held the shares hardly for 11 months. May 22 to 31st of March 2023, you can calculate the period of holding comes out to be 11 months. Period of holding comes out to be 11 months. So that means it is a short-term capital asset. Okay, now. And he sold all the shares for 2,100. So full value of consideration 2,100 minus what is the cost of acquisition of the shares? Here the cost of acquisition of the shares is equal to the fair market value adopted for the calculation of value of taxable perquisite. For the purpose of calculation of the taxable perquisite, whatever the fair market value you have adopted, the same will become the cost of acquisition while calculating cost capital gains. Yes or no? Have we studied all this or not? Yes, we have studied in our regular classes. So it will be 1500 rupees per share. Cost of acquisition. So short-term capital gains per share is equal to 600 rupees. This is per share amount. Per share. Now, total short-term capital gains is equal to totally 1500 shares into 600 rupees per share. It will be 9 lakhs rupees. Okay, ma. So these are all his income details. Now, income from salary and capital gains. Now, after that, the following are the transactions were made by Mr. Kamal during the previous year 22-23. He earned a rental income of 35,000 per month from a 3 BHK residential flat situated in Delhi. He purchased the said flat for 45 lakhs in June 2022 using the housing loan available from the employer and his own savings. It was let out from July 2022. Municipal taxes of 12,000 for the financial year 22-23 was paid by Mr. Kamal. So here, with the help of this particular information, we need to calculate income from house property. Okay. Next, he invested 3 lakhs in RBI floating rate savings bonds on 1st of September 2022, earning interest of 7% per annum. Interest is credited half yearly on 1st January and 1st July every year. Assume the receipt basis for taxation. And this will comes under your income from other sources. Next. He also paid LIC premium of 15,000 for self, 2,000, 20,000 for wife, 30,000 for dependent father aged 75 years. Medical insurance premium paid on the health of the dependent brother, major dependent son amounted to 5,000 paid by check, 10,000 paid by cash respectively. So this is chapter 6A deductions. Now, in December 2022, he earned a dividend income of 5 lakhs gross on the shares of bank held by him. So this is again income from other sources. Next, you are required to compute the total income and tax liability for the assessment year 23-24, clearly showing all the workings, ignoring the sections of 115 BSc workings. So under regular taxation provisions, we need to calculate the total income and as well as tax liability. So it's a kind of a problem which one can expect in the main exams as question number one. As question number one. What is question number one? Total income problems. A lengthy problem will be given. Do you remember? 12 marks. Sometimes even it is for 15 marks, which is under compulsory question category. So you can expect these kind of questions. You have income from salary, you have capital gains, you have house property income, you have other sources, you have chapter 6A reductions. Then you ask to find out the total income and tax liability also. Clear, Amma? Every one of you. Now, so 14, computation of total income of Mr. Kamal for the estimate year 23-24. Income from salary, basic salary, 42 lakhs. We have already calculated everything with respect to salary here. We just noted down here, cross-checking. Basic salary, you can check out 42 lakhs per annum. 42 lakhs per annum. Client entertainment allowance, 40,000. I've already explained you. Client entertainment allowance, taxable 40,000. Leave travel allowance. Leave travel allowance, what is the taxable portion? 3 lakhs. 3 lakhs. Next. Performance bonus, 20% of basic salary. How much amount? 8,40,000. 8,40,000. Interest on housing loan, we have already calculated 68,750. Got it, Amma? 68,750. Sweat equity shares allotted. These calculations also we have done. Sweat equity shares, taxable perquisite 3 lakhs rupees. 3 lakhs rupees. So that's it. Total it up. You'll get the gross salary. How much, Amma? 42 lakhs plus 40,000 plus 3 lakhs plus 8,40,000 plus 68,750 plus 3 lakhs. So gross salary comes out to be 57,48,750 minus standard deduction 50,000. Then you'll get 56,98,750 as taxable salary. Okay, ma, every one of you. Now, second head of income, income from house property. Check it out here. This will give you the income from house property income. He earned rental income of 35,000 per month. So don't jump immediately 35,000 per month into 12 months is my gross annual value. Wait. When it is given from let out basis, it was given from July 2022. So that means during the current previous year, it was under let out only for 9 months. Only for 9 months. Every one of you following now. Right, sir? So 35,000 into 9 months will give you the gross annual value 3,15,000 rupees. 35,000 into 9 months. Since the question does not containing the information of fair rental value, municipal rental value, standard rent, whatever the information you have, that is your gross annual value. What is the information you are having, Amma? Actual rent. The actual rent itself is a gross annual value. Then deduct the municipal taxes paid, 12,000. How much is given, Amma? Municipal taxes, 12,000. Then you will get what, Amma? NAV, net annual value, 3,03,000 into 30% is your standard deduction. 90,900 minus interest on borrowed capital. How much is the loan you have borrowed? 15 lakhs. How much interest you are paying? just 2.5 percentage. For your kind information, you have taken this loan from your employer, and for your employer, you are paying only 2.5 percentage. Yes or no, ma'am? It was clearly given here now. He availed housing loan of 15 lakhs at a rate of 2.5% per annum. So 15 lakhs into 2.5 percentage into, during the current previous year, the house was in existence only for 10 months. In the month of June, he purchased only for 10 months. You have paid interest. So into 10 divided by 12. So 31,250 is your interest on housing loan. So NAV 3,03,000 minus standard deduction 90,900 minus interest on housing loan 31,250. So your income from house property 1,80,850. Clear, Amma, every one of you. Next, moving on. Capital gains, we've already calculated. Do you remember? Capital gains, taxable short-term capital gains, 9 lakhs rupees. Capital gains, 9 lakhs rupees. Now, income from other sources. See, dividend income, the last point he has given in it, dividend income. He earned a dividend income of 5 lakhs rupees. So, dividend income 5 lakhs. Sir, with respect to dividend income, we have a deduction benefit now. Yes, you have a deduction benefit, but only with respect to interest incurred. If you purchase the shares by taking a loan, and on that loan you are paying interest. Now that interest on loan allowed as deduction, but subject to maximum of 20% of dividend income. Yes or no? Actual interest paid are 20% of the dividend income, whichever is lower. See here, the question, Salen, how you purchase the shares under. Of course, the shares are given by the company as spread equity shares to you. So you have not taken any loan for buying that particular shares. So that's why the entire dividend income is taxable. Next, interest on RBI bonds, where it is, yeah, 30 lakhs you invested at a rate of interest of 7% per annum. But however, you invested in the month of September only. And you will get the interest only for September, October, November, December. That's it. That's it. Because the interest is getting paid here half yearly basis. 1st of January and 1st of July every year. Now, during the previous year, 2022-23, since you purchased the shares on, sorry, you invested in the RBI floating rate bonds on September 1st, right? So that means for 2022-23, only 2 times the interest will be paid only. When? On 1st July 2022 and 1st January 2023. Only on these 2 dates, the interest will be accrued and received only. See, as on this particular date, July, you are not invested. You have not invested. So ignore this. Now, as on 1st of January 2023, yes, I'm holding RBI floating rate savings bonds. So you will get interest for 6 months. But of course, clearly here mentioned that assume receipt basis for taxation. Clear, every one of you. So it is getting credited on 1st of January. So you can see here, the interest is calculated only for 4 months, 30 lakhs into 7% into 4 by 12. So 70,000 rupees. September, October, November, December. Only 4 months interest will be credited to your account under. Even though 6 months interest will be accrued under. Even though 6 months interest will be accrued, but how much you received under? Only 4 months. Every one of you following now. So 70,000 rupees. So 5,70,000 will be your income from other sources. Now time for the gross total income. What is your salary income? 56,98,750 plus house property 180,850 plus capital gains 9 lakhs plus 5,70,000 other sources income. 73,49,600 is your gross total income minus chapter 6 reductions. Look at the chapter 6 reductions. What are given? LIC premium of 15,000 for self. We can claim deduction under section 80C. 20,000 for wife. Under section 80C you can claim. 30,000 for dependent father. Not allowed. Because LIC premium allowed as deduction only towards self, spouse and children. That's it. Parents, brothers and sisters, not allowed under. So under section 80C, you can claim 15 plus 20, 35,000. 35,000. Okay, now under section 80D, medical insurance premium paid on the health of the dependent brother, not allowed, not allowed. Under section 80D, medical insurance premium paid towards self, spouse, children, and parents, only allowed as direction. Only allowed as direction. Next, brothers and sisters, medical insurance premium paid not allowed under. Major dependents and amounted to 5,000, but of course, this is also not allowed because paid in cash. Paid in cash. Right, sir. So, medical insurance premium nil. Medical insurance premium should be paid by any mode other than cash. Under section 80D, we have studied this. Yes or no, ma? Right. So 35,000 is the chapter 6A reductions minus 35,000. You will getting the taxable income 73 lakhs 14,600. 73 lakhs 14,600 is your total income. Now moving on, the calculation of tax liability. Computation of tax liability. Sir, out of the total income of 73 lakh 14,600, you have only one special income, that is short-term capital gains. Remaining everything is a normal income, general income, where the slab rates are applicable in it. Clear now? So on STCG, the rate of tax applicable only 15%. So 9 lakhs is your STCG into 15%. So 1,35,000 is your short-term capital gains income. 1,35,000. Clear? Next, the remaining, see, out of 73, 14, 600, 73, 14, 600, how did you get this sum? 73, 14, 600 minus 9 lakhs of short-term capital gains. So you are getting general income 64, 14, 600, 64 lakhs, 14,600. And what is the age of the SSC given, sir? Anything mentioned age of the SSC? 48 years. So normal citizen, basic exemption limit starts with 2,50,000 nil. Tax liability nil. Next slab 2.5 lakhs to 5 lakhs at 5%, 12,500. Next 5 lakh to 10 lakh, slab rate 20%, 1 lakh. Next over 10 lakhs, above 10 lakhs. So 10 lakhs to 16 lakh 14,600. What is the difference of income comes out to be? 54 lakh 14,600 into 30%. 16 lakh 24,380. Add 1 lakh 12,500. So it will be 17 lakh 36,880. For which add the tax and short-term capital gains also, then you will get 1 lakh 18 lakh 71,880 income tax. This is income tax. 18 lakh 17,880. Since the total income of the SSC exceeding 50 lakhs rupees, but not exceeding 1 crore, the total income of the SSC above 50 lakhs, but less than 1 crore, less than or equal to 1 crore. So surcharge comes into the picture. What is the rate of surcharge applicable here? 10%. Surcharge at the rate of 10%. Okay, now. So add surcharge 10%, 1,87,188. Then you will get this is income tax plus surcharge 20,59,628, for which add health and education cess at the rate of 4%, which comes out to be 82,363. Then the total tax liability comes out to be 21,41,431, rounded up to 21,41,430. That's it, sir. 21,41,430 is a tax liability of Mr. Kamal. So go through it once and ask the doubts if any. Every one of you. Completed, sir. Now let's moving on to the next question and the last question of income tax RTP. So Mr. Akash has undertaken certain transactions during the financial year 22-23, which are listed below. You are required to identify the transactions in respect of which quoting of the PAN is mandatory in the related documents. First one, opening a current account with HDFC Bank. See, whenever you're opening the current accounts with the banks, then coding of the PAN number is mandatory. Right, sir. Next, shares of sale of the shares of ABC Private Limited for rupees 1,50,000. Yes. It's mandatory. Purchase of the two-wheeler motor vehicle of rupees 1 lakh, not mandatory. For two-wheeler vehicles, it is not mandatory, sir. For four-wheelers, it is mandatory. For two-wheelers, it is not mandatory, right? Whatever might be the value of the two-wheeler. Next, purchase of the professional laptop of rupees 3 lakhs. Since the value exceeding 2 lakhs here, the coding of PAN is mandatory. Right, sir. So that's it. So after that, the solutions is started. Only 15 questions given. That 15 questions says questions we have completed. So for the 15th question, look at the answers. Opening a current account with HDFC Bank. Yes. Coding of the PAN is mandatory on opening of a current account by a person with a bank. Sale of shares of ABC Private Limited. Yes. Since the value exceeding 1 lakh rupee. The amount of the sale of unlisted shares exceeding 1 lakh rupee. Purchase of two-wheeler motor vehicle of 1 lakh. Since the purchase is of two-wheeler, coding of PAN is not mandatory. Not mandatory. Purchase of a professional laptop of 3 lakhs. Yes. Since the amount paid exceeding 2 lakhs rupees, PAN coding of the PAN number in that particular transaction is mandatory. Every one of you. Clear now? Right. So after that, GST will be started, and that GST I'll take up you in the next session. Okay now? Right, sir. So see you in the next session for the RTP May 2023 GST. Till then, have a good day and good night, sir. A very good morning, students. Welcome to the Shrestha Taxation classes. We are discussing May 2023 RTP taxation subject. In the last session, we have completed income tax portion. Totally, we have given with 15 questions from income tax, and we have completed all the 15 questions. Now, time for the GST. So, May 2023 RTP, paper 4B, indirect taxes. Now, first, as usual, MCQs. First 5 MCQs, case scenario MCQ, sir. So, let's have a quick go through about the case law. Manvata Trust is a charitable trust registered under Section 12AB of the Income Tax Act 1961. The trust is well known for its educational, charitable, and religious activities. So this trust involving in providing the educational services, charitable related services, and religion related services. The trust became liable to registration under the GST in the current financial year since it exceeded the threshold limit for the registration and thus got itself registered in the state of Gujarat in the month of May. So clearly mentioned, it became liable to the registration in the current financial year and it got itself registered in the state of Gujarat in the month of May. So that means only during the current previous year, it is a registered entity. So that means during the preceding financial year, it is an unregistered entity since its turnover not exceeded threshold limit. Clearly mentioned only during the current previous year. Only during the current financial year, it exceeded the threshold limit for registration. Okay, sir. So that means during the preceding financial year, its turnover is less than the threshold limit. That is 10 lakhs or 20 lakhs or 40 lakhs as the case may be. Okay, now next. In the month of June, a multinational company, Dhruv Tara, gifted 500 laptops worth 50 lakhs to the trust free of cost for the charitable purposes without any intention of seeking any business promotion from the same. So here the multinational company providing the 500 laptops at free of cost without expecting anything in return. They're not asking for any business promotion in the premises of the charitable trust. Yes or no? Every one of you. If you remember, we have studied in section number 7 Right, with the schedule number 1. Activities amounts to the supply even if the consideration factor is not there. Supplies without consideration. Do you remember, sir? In that, the first one we have studied about this only. Right. If any business entity transferred its assets without any consideration, but of course, in return, if it is getting any additional benefit, right, any undue advantage out of that particular free of cost transfers, that amounts to supply. Do you remember, sir? Right. Now, come back here. Manvata Trust distributed these laptops. Manvata Trust distributed these laptops for free in the same month to the needy students for facilitating them in their higher studies. Manvata Trust owns a higher secondary school, Manavata Higher Secondary School in Gujarat. In the month of July, the trust availed security personal services from the Perfect Security Solutions. Gujarat, a proprietorship concern for the security of the school premises for a consideration of 2 lakhs. It also received legal consultancy services from Maya & Co, a firm of advocates, for the issues relating to the said school, rupees 1,20,000 in the same month. So these are all the inward supplies. Manavata Trust furnished the following information regarding the expenses incurred by it in the month of August. Incurred the expenses incurred by it. When you are going to incur the expenses, when it comes to your inward supplies. When you're buying something or when you're receiving something, then only you will pay the amount, na? Every one of you. Then only you will incur expenditure, na? So expenses incurred by you, that means that is your inward supplies. All the transactions being interstate, so IGST is leviable. Services received. Receiving means what? Inward supply. And used for supplying taxable outward supplies. Catering services received for students of Manvada Higher Secondary School. Buses purchased. We are buying something. That's why we are paying something. We are incurring some expenditure. Inward supplies. With seating capacity of 25%, including driver, 10,50,000 rupees. Buses were delivered in the first week of September. This is very important. The buses are delivering to us in the first week of the September. Even though we incurred this expenditure in the month of August, we purchased in the month of August, but we got the delivery of the buses in the month of September. Next. Manavata Trust provided the following information respective to the services provided by it. Means what, Amma? Outward supplies. Outward supplies. Services provided by it during the month of August. It runs an old age home for the senior citizens. Nominal monthly charges of 15,000 for boarding, lodging, maintenance are charged from each member. Total number of members is 20. Okay. First, we are just going through the question. After that, we'll see the MCQs on it. It rents out a community hall. It rents out a community hall situated within the precincts of a temple, managed by it on 15th of August for a religious function in the first half for 5,000 and for an art exhibition in the second half for 6,000. Okay. It rents out the rooms in the precincts of the said temple for the devotees for a rent of 950 per room per day. Total rent collected in the August month 35,000. Okay. All the figures given above are the exclusive of taxes wherever applicable. Aggregate turnover of the Manavata Trust for the preceding financial year was 15 lakhs. This is what already I have said earlier. During the preceding financial year, it is unregistered trust because its turnover is less than threshold limit. During the preceding financial year, the turnover given 15 lakhs only. Since not exceeding 20 lakhs rupees, it has not covered under a registered category. Registration is not mandatory during the preceding financial year. Since in the current financial year, its turnover exceeded the threshold limits. So it has undergone the registration process. Clear, Amma? Next. All the conditions for necessary claiming of availment of ITC fulfilled. Manvata Trust intended to avail the exemption from GST wherever applicable. Based on the information given above, choose the most appropriate answer to the following questions. Now, time for the MCQs. First one, which of the following activities of Manvata Trust does not amount to supply under the GST law? Does not amount to supply means what, ma? Means exemption. Exemption. So simply we can say that which of the following activities of the Manvata Trust exempted from GST law? Exempted from GST law. Okay, let us see one by one. Free laptops distributed to the needy students. Free laptops. It comes under the charitable activities. It comes under the charitable activities and exempted from GST. So the answer is A. Let us see the others also. Next one. Boarding, lodging, and maintenance of the senior citizens by the old age home run by the trust. Sir, is it fully exempted? Is it unconditionally exempted? Is it exempted without any ceiling limits? No. This particular service is exempted only when the value of consideration is less than 25,000 rupees per member per month. Per member per month. This is what we have studied now, every one of you. So you can see this is a exemptions chapter or material. We have studied in the point number H under government services. Let me take you to that particular provision. Yeah, here it is. Services provided by an old age home run by the CG, SG or an entity registered under Income Tax Act to its residents aged 60 years or more against the consideration, including the boarding, lodging and maintenance charges up to 25,000 per month per member. Then only it is exempted. Then only it is exempted. Are you following, sir? So boarding, lodging and maintenance of the senior citizens out and out is not an exempted service. It is an exempted service only when the consideration charge is up to 25,000 rupees per month. So less than or equal to 25,000 per month per member. So it is not a service which is wholly exempted from tax. No, it's not that a kind of service. It is an exempted depending upon the consideration charged. Are you following or not, Amma? Next. Renting of community halls situated within the precincts of the temple managed by the trust. It is an exempted service only when the value of the consideration charged is less than 10,000 rupees per day. So it is also not an unconditional exemption. It is a conditional exemption. It is a conditional exemption depending upon the amount charged for the renting of the community hall. You can see the limit in our material. Services exempted here. Renting of the premises, community halls, Kalyan Mandapa, open area and the like, where the charges are 10,000 rupees or more per day. This here you can see. However, the following are not exempted services. Where the renting of the rooms were charged 1,000 rupees or more per day. Community halls, 10,000 or more per day. It is a taxable service. It is a taxable service. If exceeding 10,000 rupees, if not exceeding 10,000 rupees, it is an exempted. Are you following or not, Amma? Every one of you. Next. Renting of rooms in the precincts of the temple managed by the trust. It is also exempted service only when the amount of the consideration is less than 1,000 rupees per day. Less than 1,000 rupees per day. The same material you can see here. Here you can see. Accommodation services provided by the trust having a value of below 1,000 per day is exempted from GST. That means if it is exceeding or equal to 1,000 per day, it will be a taxable service. So the last three are exempted services subject to the amounts charged, consideration charged. So that means they are out and out, not an exempted service. They are taxable. But if the consideration charged is less than the limits mentioned, then only they are exempted. So prima facie, they are taxable. Okay, sir. So only the first one is exempted, sir. So 1A is the answer, sir. You can check out here 1A. Free laptops distributed to the needy students. Clear, every one of you? Next, moving on to the second question. Compute the value of inward supplies. Compute the value of inward supplies on which the tax is payable by Manavata Trust under reverse charge mechanism. So we need to find out the value of the inward supplies where the tax is payable under reverse charge mechanism. So let us see one by one. What are the inward supplies received by it? So you can check out here the inward supplies. I've already mentioned. So Manavata Trust owns a higher secondary school, Manavata Higher Secondary School in Gujarat. In the month of July, the trust availed security personnel services from Perfect Security Solutions, Gujarat, a proprietorship concern. Yes, security services are covered under reverse charge mechanism. Covered under reverse charge mechanism. However, if the same security services provided to an educational institution, do you remember, sir? Services provided by an educational institution exempted from GST. Services provided to an educational institution. We have studied some list of services. Catering services including midday meal scheme. And after the transportation of the students, faculty, staff, housekeeping services, security services. So security services provided to an educational institution, an exempted service. So when it is an exempted, the question of paying the tax under RCM doesn't comes into picture. See, only when it is a taxable service, then you have to think about whether should I pay the tax under forward charge mechanism or reverse charge mechanism? Yes or no? If it is an exempted service, you need not bother about forward charge, reverse charge. Clear? You can see in our material, we have discussed already under educational services category. Educational services, let me take you to the educational services. Yeah, here it is. Educational services. And there you can see services provided to an educational institution by way of security. By way of security. When such services are performed in such educational institution. Are you following or not, every one of you? And you can see the above 1, 2, 3 of B point exemption. That means these three and these three. Exemption is applicable only if services supplied by an institution providing the services by way of preschool education and education up to higher secondary school. Even our Manavata Trust is also a higher secondary school. Okay, ma? Exemption can claim or not? We can claim and since it is exempted, the question of RCM doesn't comes into picture. Next. It also received legal consultancy services. Yes. Legal consultancy services also comes under reverse charge mechanism. However, it covers under reverse charge mechanism only when the service recipient must be a business entity. Yes, our Manavata Trust is a business entity. It is a business entity and whose turnover during the preceding financial year, should exceed the threshold limits for registration. Now, in our question, we have learned that during the preceding financial year, the turnover of the Manavata Trust is just 15 lakhs only. So during the preceding financial year, Manavata Trust turnover is less than threshold limits. The legal consultancy services also exempted, right? Not covered under reverse charge mechanism. Clear, sir? Every one of you, right? Next. So the value of inward supplies the value of inward supplies we have received here and which are taxable under reverse charge mechanism is 0. Okay, sir. So the answer will be nil. See, whatever the security services we have received, it is an exempted service. Legal consultancy, exempted service. Because Manmother Trust preceding financial year turnover not exceeded threshold limits. Right, sir? So 2D is the answer. 2D nil. Now third question. Compute the value of exempted supplies made by Manmother Trust for the month of August. Exempted supplies made by Manavata Trust. And we need to see what, we need to see outward supplies. We need to see the outward supplies. Okay. So what are the outward supplies provided by each, sir? Here. Services provided by each during the month of August. It runs an old age home for senior citizens. Normally, the monthly charges 15,000 for boarding, lodging, and maintenance are charged from each member. The total number of members 20. Just now we have studied when it comes to the old age home for the senior citizens. What is the threshold limit we have studied, Amma? 25,000 rupees per month per member. So up to 25,000 rupees per month per member, it is an exempted service. It is an exempted service. So the first point is an exempted service. So what is the value on it? It will be 15,000 rupees per member into 20 members. So 3 lakhs exempted. Second one, it runs out a community hall situated within the precincts of a temple managed by it on 15th of August for a religious function on the first of 5,000 and for an art exhibition in the second of 6,000. So that means totally in a single day, how much it collected the rent amount under. So rent collected in a single day will be 11,000 rupees under. And just now we have studied the limits. What is the limit under? If the amount exceeding 10,000 rupees per day, it will be taxable now. Yes or no? Every one of you. Yeah, here it is. Renting of premises, community halls, right? And the like where the charges are 10,000 or more per day, it will be taxable. Here it is 11,000. So it is a taxable value only. Next, it rents out the rooms in the precincts of the said temple to the devotees for a rent of 950 per room per day. Up to 1,000 rupees per room per day, it is exempted. As long as you are collecting the rent below 1,000, it will be exempted. You are collecting 950 rupees a day. So it is an exempted service. It is an exempted service only. So the total rent collected during the month of August comes to be 35,000. So this entire 35,000 is an exempted value of service only. So in the first one, it is 3 lakhs. Why it is automatically changing its size? So in the first one, it is 3 lakhs exempted. Second one, taxable. Third one, 35,000 exempted. So total put together, 3,35,000 exempted value of service. Option C, 3,35,000 exempted value of service provided by Manvata Trust. 3C, 3,35,000. Clear, sir? Every one of you. Now, coming to the fourth one. Compute the value of taxable supplies made by Manvata Trust during the month of August. So now in this question, we asked to find out the taxable value of supplies. Taxable value of supplies. Just now we have already noted down the value of taxable supply comes out to be how much only? 11,000 rupees. It is the only taxable outward supply made by the Manvata Trust. 11,000 rupees is the answer. 4B. 11,000. Clear, sir? Every one of you. Next. Fifth one. The last MCQ. Determine the amount of ITC. The amount of the ITC that can be credited to electronic credit ledger of the Manvata Trust in the month of August. So the amount of ITC, input tax credit, that can be credited to the electronic credit ledger. So that means we need to verify what amount? We need to verify the inward supplies again. Inward supplies again. Taxable inward supplies for your kind information, not exempted. Because if that inward supply is an exempted, you don't get any input tax credit. Yes or no? Now, let us see. Yeah. So in this paragraph also we have studied inward supplies, but they are exempted and security and legal consultancy. Now we need to see these services and right. So Manavata Trust furnishes the following information regarding the expenses incurred by it in the month of August. And all the transactions being interstate. So IGST. Services received and used for supplying taxable outward supplies. See, you are receiving some services. Why? Because for providing some taxable outward supplies. So you will get input tax credit on this supply. Yes or no? Yes, sir. So ITC can be availed. How much, sir? Sir, if you remember and identify, in the entire question, there is no rate of GST mentioned in there. The rates of GST not mentioned in the question. Don't worry, sir. If the rates of GSTs are not mentioned, we need to take the assumption that CGST rate 9%, SGST rate 9%, and rate of IGST as 18%. As 18%. If the rates are not mentioned, yes or no? Every one of you. Right, sir. So here 3,50,000. Since it is an interstate supply, IGST is leviable at the rate of 18%. How much you are getting, Uma? 3,50,000 into 18%, 63,000 rupees. 63,000 ITC you can avail. Second one, catering services received for students of Manavata Higher Secondary School, 2 lakhs. Catering services, for your kind information, this is an exempted service. Hence, no ITC allowed. No ITC is allowed. Next, buses purchased with the seating capacity of 25 persons, including driver, 10,50,000. Buses were delivered in the first week of September. We have learned a golden principle with respect to the availment of input tax credit. What is that, Amma? Input tax credit can be availed only when you receive the goods into your premises. Without the receipt of the goods into your premises, how can you claim input tax credit? Yes or no? Every one of you. Since you are receiving the delivery of the goods in the month of September, you are eligible to claim the input tax credit in the month of September only. But here we are doing the calculations for the month of August. So for the month of August, you don't get any input tax credit. No ITC is allowed. For the month of September, yes, you can claim. For the month of September, yes, you can claim, since you're receiving the delivery of the buses in the month of September. But for the month of August, you don't get any input tax credit. Okay, so the amount is 63,000 rupees is the amount of input tax credit you can avail for the month of August. So look at the answer. Yeah, 63,000, 5B. So clearly mentioned in the month of August. So 63,000, 5B, 63,000. Clear, sir? Every one of you? Right. So that's the case law scenario on it. Okay, now 5 questions. So remaining 5 questions, I'll explain you in the next session, sir. Clear, every one of you? Okay, now see you in the next session, sir. A very good evening, students. Welcome to the Stress Taxation classes. We are discussing May 2023 RTP. So we have completed income tax discussion. And after that, we have also started discussing about the GST. The last session we have completed up to question number 5. Now let us continue with the question number 6. Mr. Prudviraj, a registered person under GST, is engaged in supplying services as is discussed in the table below in Maharashtra. So he is a supplier from the state of Maharashtra, sir. Okay. He has furnished the following information with respect to the services provided or received by him during the month of February. So that means this table containing both outward supplies and as well as inward supplies. So one must be very, very careful. So clearly mentioned services provided and as well as received by him. Okay, now let us see one by one. First of all, what was asked to find out here? Compute the net GST payable in cash by Mr. Prithviraj for the month of February. So we asked to find out the net GST payable in cash. So we'll see the tax treatment simultaneously. First one, Carnatic music performance given by Mr. Prithviraj to promote, this is very important point here, to promote a brand of ready-made garments. This is an intrastate transaction. 1,40,000 is a value of supply. Sir, any services with respect to the arts, music, culture, if the value of supply is less than or equal to 1,50,000, it is an exempted service. However, if such services are provided as a brand ambassador in relation to the promotion of a brand, of a product or a service, then it will be fully taxable, irrespective of the fact whether the consideration charged is less than or equal to 1,50,000 or more than 1,50,000. Yes or no? Brand ambassador services are fully taxable, irrespective of the amount of consideration. So this 1,40,000 fully taxable. Since it is an intrastate transaction, CGST, SGST is leviable. And what are the rates of GST is mentioned? Here you can see the rates of CGST 9%, SGST 9%, and IGST 18%. So CGST at the rate of 9% and SGST at the rate of 9% is applicable. This is your outward supply now. So you will get output tax liability 1,40,000 into 9%, 12,600. 12,600, 12,600. Okay, ma, every one of you. Next. And this is output tax liability of Mr. Prithviraj and payable under forward charge mechanism only. So Prithviraj himself is liable to pay this GST. Next, outdoor catering services availed. Availed means this is an inward supply. Inward supply. For a marketing event organized for his prospective customers, intrastate transaction. So generally outdoor catering services, there are only two situations where outdoor catering services are exempted. Number one, when such services are provided to an educational institution which running the preschool education or education up to higher secondary schools, right? Sure. Yeah, that's the only situation where the outdoor catering services are exempted. However, the remaining in all the cases, they are taxable. But in order to claim the input tax credit, on these services, the input tax credit is allowed only in two cases. Number one, when you're receiving an outdoor catering service, it should be for providing an outward supply of outdoor catering service. So that means whatever the services you're receiving, such services are you're receiving for the providing similar kind of services. That is the first case where input tax credit is allowed. Number two, when these services are received by the employer in relation to his employees for providing the same to the employees under a statutory obligations. Only these are the two cases where the input tax credit is allowed with respect to the outdoor catering services. So this is a taxable service, but ITC not allowed here. ITC not allowed, sir. Because here the outdoor catering services are received by Mr. Prithviraj for a marketing event organized for his prospective customers, not in relation to his employees, in relation to his customers. So that's why input tax credit not allowed, Amma. I've said to see the tax treatment simultaneously now. Yeah, here it is. Yeah, this is question number 6. Computation of net GST payable. So the first case you can see here, Carnatic music, that I've already told you, it is fully taxable. So that's why CGST 12,600, SGST 12,600. Clear, sir. Right? And the second case we have discussed here is outdoor catering services. The value of supply 50,000, but the credit not allowed. This is about input tax credit availability, sir. Combination of total ITC available. For with respect to this 50,000 credit not allowed, sir. So I've already told you ITC and outdoor services or catering services is blocked, except when such services are received by the taxpayer who is in the similar line of business or provided by the employer to its employees under a statutory obligation. Okay, now next, third one, services of transportation of students provided to Subhaskar College, providing education as a part of a curriculum for obtaining a recognized qualification. Services of transportation of students. So transportation of students, faculty, staff. When these services are provided to an educational institution, it is an exempted service. Correct. But it is an exempted service as long as such educational institution providing the services in relation to the preschool education or up to secondary higher school education. In the question, they clearly mentioned college. Services of transportation of students provided to Subhaskar College. Right, sir? For providing education as a part of a curriculum. See, it is covered under the definition of educational institution, no doubt. But the services of transportation of students exempted only with respect to the educational institution providing the services of preschool education and education up to secondary higher school. When the services of the transportation of students provided to a college, that will be a taxable service. It is an intrastate transaction. So again, CGST 9%, 9,000 rupees. SGST 9%, 9,000 rupees. Okay, ma. It's a taxable service. So you can check out here in a outward supplies category. 9,000 CGST, 9,000 SGST. Services of transportation of students provided to an educational institution other than providing preschool education or education up to higher secondary school are not exempted. Okay, every one of you. Next, third one, fourth one, legal services availed for official purpose from an advocate located in Gujarat. It is an interstate transaction, sir. It is an interstate transaction. So you can see here, legal services availed. So means it is an inward supply. So we need to verify whether the input tax credit allowed or not on such inward supplies. So legal services, we have already learned that legal services provided to a business entity whose aggregate turnover during the preceding financial year exceeding threshold limits during the preceding financial year, then only that legal services are taxable, and they are taxable under reverse charge mechanism. Yes or no? There is only one case where legal services are taxable. What is that case? Service recipient must be a business entity. Condition number one. Service recipients, such service recipients aggregate turnover during the preceding financial year should exceed threshold limits. 10 lakhs or 20 lakhs or 40 lakhs, as the case may be. Yes or no? Only when these two conditions are satisfied, then only the legal services are taxable under reverse charge mechanism. Otherwise, the legal services are exempted. First of all, who is the service recipient here? Mr. Prudviraj. Because legal services availed for official purposes only. So Mr. Prudviraj. So now we need to know whether Mr. Prudviraj's previous year turnover exceeding the threshold limits or not. The information is given already here. The turnover of Mr. Prudviraj was 2.5 crores in the preceding financial year. 2.5 crores. It exceeded all of our threshold limits. And whether you take 10 lakhs or 20 lakhs or 40 lakhs, even the higher threshold limits for the registration, that is also crossed 2.5 crores. So during the preceding financial year, the aggregate turnover exceeded threshold limits. Hence, these services, the legal services, are taxable. Taxable under what, Amma? Reverse charge mechanism. Every one of you following or not, Amma? Right? So, 1,75,000, and it is an interstate transaction only into 18 percentage. 18 percentage. 1,75,000 into 18 percentage. 31,500 into 18 percentage. 31,500. So this should be payable by whom? Payable by that legal consultancy? No, it should be payable by the recipient. In our case, who is the recipient? Mr. Prithviraj. Taxable under reverse charge mechanism. So Mr. Prithviraj has to pay this amount under reverse charge mechanism by using electronic cash ledger. By using the balance in the electronic cash ledger. See, for the purpose of payment of the tax under reverse charge mechanism, you cannot use the balances in electronic credit ledger. You have to compulsorily pay through electronic cash ledger. Clear, Amma, every one of you? Okay, good. Okay, Mr. Prithviraj accepted to pay this by way of cash. Now the question is, sir, can I take this 31,500 as my input tax credit? Yes, absolutely. Why not? You can take this 31,500, right? We can claim as input tax credit as well. Absolutely no problem. Right, sir? So you can see here tax treatment. GST payable under reverse charge. Legal services availed. 1,75,000 is the value of supply. 31,500 is a IGST liability, sir. Okay, now you can see here legal services received by business entity with aggregate turnover in the preceding financial year exceeding threshold limits are not exempted, and the tax on the same is payable under reverse charge. Clear, Amma? Next, sir, can I take input tax credit combination of IDs available? Absolutely, yes. Legal services availed. 31,500 IGST credit you can take. Absolutely no problem. Next. Fifth one, services provided to wealth bank. Provided to wealth bank. So this is an outward supply. As a business correspondent with respect to the accounts in a branch of the bank located in an urban area. Sir, when you are providing the services as a business correspondent to a banking company or financial institutions, NBFCs, in relation to the accounts of the branch located in rural areas, exempted from GST. But here in the question, it was clearly mentioned in relation to the accounts of a branch located in urban area, this is taxable. This is a fully taxable service. Intrastate mention. So into 9% CGST 18,000 into 9% SGST 18,000. Right, sir? Every one of you following now. Right, sir? So look at here with respect to outward supplies. Yeah. Services provided to wealth bank. 2 lakhs is the value of supply, 18,000 CGST liability, 18,000 SGST liability. Clear? Next. Sixth one, recovery agent services provided to. So again, what am I? This is outward supply to a car dealer intrastate transaction. Ma, recovery agent services. So recovery agent services taxable under reverse charge mechanism. Yes, of course, taxable under reverse charge mechanism. But when such services are provided to a banking company, financial institutions, and BFCs, yes or no? But here you are providing to whom? You are providing to a car dealer. So this is a taxable supply. Taxable under what, Amma? Taxable under forward charge mechanism. Clear, everyone? So look at here. Services provided as a recovery agent. 15,000 value of supply. into 9% CGST, 9% SGST. 15,000 into 9%, 1,350. Clear. Next. General insurance taken on car. Taken means what, Amma? This is an inward supply. Inward supply. On a car, seating capacity 5. This is very important point. Seating capacity is 5, used for official purpose. So we have studied in the exemptions chapter. As long as the seating capacity is less than or equal to 13%, less than or equal to 13%, including driver, it is an exempted supply. It is an exempted supply. Now, with respect to the exempted supplies, ITC allowed or not allowed, Amma? ITC not allowed. ITC not allowed, sir. Every one of you following now. Right, sir? See, you purchased a car. You have taken a general insurance on it. But the seating capacity is just 5 only. Less than 13. So hence, it is an exempted supply. So ITC not allowed, sir. Are you following or not, Amma? Every one of you. So look at here. General insurance taken on a car, right? ITC and motor vehicles for transportation of persons with seating capacity less than or equal to 13 persons, including the driver, is blocked. I said, I think it is an exempted supply. No. It is covered under blocked credit. Section 17, subsection 5, blocked credit. It is a blocked credit. See, you can claim input tax credit out of it only when that particular supply is made with respect to the similar kind of outward supply, or when you are using that car for the transportation of passengers, or when you are using that car for the purpose of imparting the driving skills. Only these are the cases where you can avail the input tax credit. But here you have taken the car for the purpose of official purposes, mentioned simply as official purposes. Clear? So that's it, Amma. Yeah. So finally, do the calculations. What is the total output GST payable? So output GST payable under forward charge, 12,600 plus 9,000 plus 18,000 plus 1350 plus, so yeah, that's it. So total GST payable under forward charge 40,950. So 40,950 CGST, 40,950 SGST. Now total GST payable under reverse charge 31,500, sir. Okay, now. So finally, the total GST payable 40,950 CGST, 40,950 SGST, 31,500 IGST. Okay, ma. Now, what is the ITC available to us? We have only one ITC available to us, that is IGST, 31,500. Okay, now finally, computation of net GST payable in cash. This is what asked for, computation of net GST payable in cash. GST payable under forward charge 40,950, 40,950, and we have one credit 31,750. Sorry, 31,500. Use it for your CGST, SGST liability. See, generally, many of the students will make a mistakes here while using the IGST credit. How, sir? See, look at here. CGST, SGST, IGST. Total output tax liability. Total output tax liability. CGST 40,950. SGST 40,950. IGST 31,500. This is our output tax liability. That is what we have decided here now. Total GST payable 40,950, 40,950, 31,500. That is what I have written here. Minus input tax credit available. CGST nil, SGST nil, IGST 31,500. So finally, output tax liability to be paid in cash 40,950, 40,950, and nil. See, generally 90% of the students will do the calculation like this because you can see here 31,500 we have a IGST liability, and 31,500 we have ITC of input tax credit. Now with the balance of ITC of input tax credit, right? So they will pay off the IGST liability. But this is absolutely wrong. So what is wrong here? IGST credit balance I'm using for the payment of IGST liability. What is wrong here? It is as per the law only. See, you can utilize IGST credit balance, IGST credit for the payment of IGST liability. There is absolutely no problem. This is as per the law only. However, how did you get this IGST liability? This IGST liability you got under forward charge? No, sir. You got this IGST liability under reverse charge mechanism. Look at here. GST payable under reverse charge. Legal services availed 31,500. And I already mentioned that any tax liability paid under reverse charge mechanism should be paid through cash. Should be paid through cash. Are you following now? See, if you got this liability under forward charge mechanism, absolutely no problem, sir. You can utilize this balance for the payment of this liability. But you got this liability under reverse charge mechanism where this liability should be discharged through cash only. You cannot utilize this balance for the payment of this liability. See, this 31,500 you cannot utilize for the payment of this 31,500 because this 31,500 liability you got through reverse charge mechanism. So compulsorily paid through cash only. So that is why here we are utilizing directly for CGST and SGST. The 31,500 you are directly utilizing for CGST and SGST. Are you following, Amma? Sir, here they are using equally, sir. Is it compulsory to equally utilize the balance of IGST for the CGST and SGST? No. No. You have option to utilize full amount towards the CGST, full amount towards HGST, or in any proportion with respect to CGST and SGST. We have recently got amendment in the Finance Act 2020. IGST credit balance can be utilized for the payment of CGST, SGST in any order, in any proportion. Okay, now every one of you, right? So the 31,500 have equally utilized for the payment of CGST and SGST. Now after that, so payable in cash how much, Amma? 25,200, 25,200, and IGST 31,500. So finally, net GST payable in cash 25,200, 25,200, and 31,500. Right, sir? So many of the students do these calculations like this. This is absolutely a wrong calculation. Since you got IGST liability under reverse charge mechanism, that should be discharged through cash balance only. Okay, sir. Every one of you. So that's answer for problem number 6. So just go through it and ask the doubts if any, sir. Completed, sir. Now let's moving on to the question number 7. Question number 7. Yeah. First one. Determine whether the GST is payable in cash. Sorry, in each of the following independent cases. So first one, Dhruv developers sold a plot of land in Greater Noida after leveling. This is important point. After leveling, laying down of drainage lines, water lines, and electricity lines. Sir, when it comes to the taxation subject, amendments plays key role. A minimum of 10 marks out of 100 marks we can expect from the amendments. A minimum of 10 marks. And this time it could be more than 10 marks because there are a lot of amendments, especially in GST. That's why we got two supplementary study material papers issued by the ICI for May 2023. One, supplementary study material containing the amendments up to 30th of April 2022. And the second one, supplementary study paper with the title Statutory Updates, which contains the amendments up to 31st of October 2022. One containing around 52 pages, the other one containing 78 pages. A lot of amendments we have seen, we have discussed in GST. Almost 9.5 hours recordings have made for GST amendments. Right, sir? So all that particular amendments, every students, those who are going to write the exams in May 23 and November 23 must watch. All such amendments have already uploaded in our app and as well as in our YouTube channel. Okay, ma. Right. So this question number 7, question number 8, question number 9 is from amendments only. ICA will always test whether the student updated his knowledge or not. ICA always wants only the updated students, not the outdated students. Do you want to be an updated student or an outdated student? You must be an updated student. So do watch amendment videos compulsory. Clear, Amma? Right? So this is from the latest amendment only. Especially this amendment came into effect by issuing a circular. See, majority of the students, what they will do is they will just prepare the amendments and notifications. That's it. They simply ignore circulars. But in my recordings, I've covered all the circulars issued up to 31st of October 2022. Clear, sir? So, sir, basically sale of plot of land. Sale of plot of land is not a supply. Right, sir? We have seen in schedule number 3, para number 5 of the schedule number 3. Right? So, selling of the land is neither a supply of good nor a supply of service. Right? Neither a supply of good nor a supply of service. It is not at all a supply, not liable to GST. But sir, I have a land. I have not sold that land as it is. I have developed that land. I have incurred some developmental activities on such land. After incurring all such development activities, after that I've sold, sir. Okay, what kind of the development activities you have undertaken? Sir, leveled the land. Earlier, it is having some ups and downs. I have leveled the land and I'm laying down the drainage lines and water lines and electricity lines also I have undertaken. After undertaking all these activities, I have sold my land. See, even after undertaking all these activities, what you are selling? Land only, na? Land only, na? Yes, sir. See, whether you are selling the land as it is or whether you are selling the land after developmental activities, it means it is a selling of land only. It is a selling of land only. So selling of land, neither a supply of good nor a supply of service. Not at all a supply, not liable to GST. Clear, sir? Right? So this we have studied in supplementary study paper, Amma. This is our supplementary study paper, which issued with the title Statutory Updates. Look at here, statutory updates. Okay, statutory updates. And in this, we have studied in the page number 35. Clarification. Yeah, look at here. Clarification regarding the applicability of the CGST on sale of land after leveling, laying down drainage lines, etc. Right, sir? So circular number 177/9 2022. So you can see here, it may be noted that any service provided for the development of the land like leveling, laying and drainage lines shall attract. See, this one is for providing the such services. See, I am the landowner, sir. If I am receiving the services with respect to leveling, laying of drainages, right, sir? See, there is a builder, developer. I have availed such services from him, right? So the services provided by that builder to me, what kind of services? Leveling, laying of drainage lines, they are taxable. But here the question is about not the services of the laying the drainage lines, electricity lines. No, it is about the selling of the land. Clearly see, sold of a plot of land. And so you can check out here. Land may either be sold as it is or after some development of such leveling, laying down drainage lines, water lines, electricity lines, etc. It is clarified that sale of such developed land is also a sale of a land. This is very important point. Sale of such developed land is also sale of land. And it is covered by para 5 of schedule 3 and accordingly does not attract GST. The question about this paragraph only. Okay now. So you can see the answer here 7-1. Circular number. I mentioned now. Circular number 177 bar 9 bar 2022. Right? So it is clarified that sale of such developed land is also a sale of land. Same point. So accordingly does not attract the GST. If a student went to the exam without knowing the circular and the same question appears in the exams, then he lost the marks. Yes or no? That's why circular is also very important. Next. 7B. Deccan Shipping Private Limited. Deccan Shipping Private Limited, registered under GST in Andaman and Nicobar Islands, provided passenger transportation services to the local residents in the ferries owned by it from Neil Island to Havelock Island. Right. This is also yet again a latest amendment issued through circular. Right. Very, very important. Right. So what are the services provided, Amma? Passenger transportation services. To whom provided, Amma? To the local residents. Very important point. Right. Very important point. In the ferries. Ferries and Amma. Ferries and nothing but boats, ships, vessels, which are used for transportation of passenger services. Boats, ships, or vessels using for the transportation of passengers. Okay, ma. Sir, here as long as that ferry used for the transportation of the passengers, right? It is an exempted service. If such ferries are utilized for the tourism purposes, then it will be a taxable supply. Right, sir? So transportation of passengers by the right through the ferries other than predominantly used for tourism purposes, right? So it is an exempted supply, sir. Now the question is, sir, here the ferries are owned by a private limited. So what? As long as such ferries are utilized for the transportation of passengers, it is an exempted supply, irrespective of the fact whether they are owned by a private limited entity or a public limited entity. Clear, sir? So this is also, as I said in the latest amendment, issued by the circular, and you can see in the page number 15. Sorry, page number 37. Clarification. Yeah, here it is. Clarification regarding the applicability of the GST on tickets of private ferry used for passenger transportation. Clear, sir? So it is clarified that this exemption would apply to tickets purchased for transportation from one point to another, irrespective of whether that ferry is owned or operated by private sector enterprises or by a PSU or a government. Clear, sir, every one of you. It is further clarified the expression public transport used in the exemption notification only means that the transportation should be open to the public. It can be privately owned or publicly owned. Okay, now. So here clearly mentioned, this is using for the local residents only, open to public. So exemption benefit you can avail and this was mentioned in the circular number 177 bar 19 bar 2022. So you can see the answer here, right? Same circular 177 bar 9 bar 2022. Okay, next. transportation of passengers by public transport other than tourism, then in a vessel between places located in India is exempted from GST. Okay, next. That's question number 7 for you. Both of these sub questions are from the latest amendments. Latest amendments. So as I already mentioned, the amendments are must watch. Everyone have to watch the amendments before going for the main examination. If you are going to the examination without latest amendments awareness knowledge, then you are going to write the exam only for 90 marks. Do mentally prepare for it. You are going to absolutely lose minimum 10 marks. Okay, next question number 8. State whether the person liable to GST in the following cases. So the person liable to GST means whether supplier is liable to GST or recipient liable to GST. Let us see. First one, Siddhi Builders registered in Haryana rented out 20 residential units owned by it in Sanskriti Society to Rudra Technologies, an IT-based firm registered in the state of it is also registered in the state of Haryana for accommodation of its employees. Ma, who is the service provider here? Service provider Siddhi Builders. Registered? Yes, sir. Who is the service recipient here? Rudra Technologies. Service recipient registered? Yes, sir. And what are the services supplying here? Renting of residential units. Sir, we have studied that under exemptions chapter, renting of residential dwellings for the use of residential purposes, it is an exempted supply. Yes, 100% correct. It is an exempted supply. However, we got an amendment. We got an amendment. So this is also based on latest amendment. This is also based on latest amendment. And what is the latest amendment, Amma? We have studied. The latest amendment is that if the service recipient happened to be a registered person, then renting of residential dwellings taxable, and taxable under what, Amma? Taxable under reverse charge mechanism. So this is a taxable service. Since the service recipient is a registered person, taxable and taxable under reverse charge mechanism. So that's the latest amendment. And as long as your recipient is a registered person, the renting of residential dwellings is a taxable supply, taxable under reverse charge mechanism. Clear, everyone? This is the latest amendment we have seen again in the supplementary study paper in the page number 20. Yeah, here it is. Services by way of renting of residential dwelling for the use as a residence, right? Except where such residential dwelling is dwelling is rented to a registered person. Every one of you following now. Okay, so this is the latest amendment, except where the residential dwelling is rented to a registered person. In this case, what am I? It is taxable. Okay, next. Second one, Measures Purohit Consultants, a partnership firm registered in Delhi as a regular taxpayer, paid sponsorship fees of 70,000 at a seminar organized by a private NGO, a partnership firm in Delhi. Who is the service provider here? This private NGO. Who is the service recipient here? Purohit Consultants. How should the sentence is started with Purohit Consultants? So it must be a supplier. See, if the sentence is started with the Purohit Consultants, it doesn't mean they are the suppliers. And clearly mentioned, na, paid. Purohit Consultants paid. So why we are paying? Because we received. We received what? We are receiving sponsorship services. Are you following, sir? Every one of you. Sponsorship services. So sponsorship services generally taxable under reverse charge mechanism when such services are provided to a body corporate or a partnership firm. If the service recipient status happen to be a body corporate or a partnership firm, then it is taxable under reverse charge mechanism. Taxable under reverse charge mechanism means the service recipient liable to pay the tax. Who is the service recipient? Purohit consultants. So Purohit consultants have to pay the tax here. Okay, now, so check out here. So in the case of services provided by any person by way of sponsorship services to any body corporate or a partnership firm, then the GST is liable to be paid under reverse charge. In the given case, sponsorship services are being provided by the private NGO firm to measures Purohit consultants, then the GST is payable by Purohit consultants as such services are taxable under reverse charge mechanism. Clear, Amma? That's question number 8 for you. Now, question number 9. Briefly enumerate the contraventions which make a registered person liable to be cancellation of registration. Yet again, this is also from the topic of latest amendment. Latest amendment. See, under rule number 21, we recently got amendments on it. We recently got amendments. Rule number 21 discussed about the cancellation of registration. Cancellation of the registration. There are two situations where the cancellation of registration comes into picture. One, where the application made by the taxpayer. Two, where the cancellation taken place by suo motu by the proper officer. Yes or no? Right? There are two cases. Whether taxpayer directly comes to the department, he himself applied for cancellation of registration. Number two, where the cancellation of registration by the proper officer suo motu. Right, sir? So under rule number 21, we got amendments. That is why this question is asked under. Okay, now see general cases like like you are claiming the input tax credit, excessively, or you are claiming the input tax credit by applying the anti-profiteering measures. You are claiming the input tax credit without issuing any invoices, or you are claiming the input tax credit. You are not doing the businesses from the, you are not doing the businesses from the registered premises. These are the cases we have studied. These are the cases we have studied. Now, with respect to such cases, two more cases added, Andy. Two more cases added. If you happen to be a regular taxpayer and not filing the returns since last 6 months, if you fails to file the returns for a continuous period of 6 months, then your registration is subject to cancellation. If you're opted for QRMP scheme and not filed the returns for the 2 consecutive tax periods, again, your registration is subject to cancellation. So these two situations newly added to the rule number 21. That's why this rule number 21 asked here. So this also we have studied in the page number 48 of the supplementary study paper. Yeah, here it is. The latest amendment to the rule number 21. Clauses H and I newly added. Two clauses. Registration liable to be cancelled if monthly filer fails to file the return continuously for 6 months. This is the first case, clause H. Or if a person opting for QRMP scheme fails to file the return for 2 tax periods. This is clause I. Point number 2. These are the two cases newly added to rule number 21. Okay, sir. Every one of you. So look at the answer for rule number 21. So these cases are already there, Amma, already in existence, right? So does not conduct the business from the declared place of business, right? Issues the invoice without any supply, right? Then anti-profiteering measures, right? Violations relating to the furnishing of the bank account details, avail to the input tax credit, right? In the violation of rule number section number 16. Okay, now claiming the less tax output tax liability. So like that, These are all the existing cases. What newly added? These clause H and clause I newly added and newly added by the Finance Act 2022. These two are the latest amendments, right? If you happen to be a regular taxpayer, a registered person required to file the return under section 39(1), monthly return filer has not furnished for a continuous period of 6 months. The second one, QRMP scheme, quarterly return filed, has not filed the returns for a continuous period of 2 tax periods. Clear? So in these two cases also, your registration is subject to cancellation. So that's question number 9 for you. Now question number 10. State the order in which every taxable person discharges his tax and other dues under the GST law as provided under section 49. What is the order of discharging your tax liability? Very simple, Amma. First, you will discharge your output tax liability of the previous tax periods, and then you will discharge your output tax liability of the current tax period, and then you will discharge the any demands raised under section 73 or 74. So these are the order of discharging your tax liability only. So first of all, always you have to clear off your previous tax period dues. Then you have to clear your current tax period dues. And then if any demand raised under section 73 or 74, that demands you have to be cleared only. Section 73, 74, fraudulent cases, erroneously refunded of, input tax credit, excess claiming of the input tax credit, right? Under fraudulent cases, willful misstatements. Do you remember 73, 74? Okay, now this is the order of discharging our tax liability and check it out. Self-assessed tax and other dues relating to the returns of previous tax periods, self-assessed tax and other dues related to the returns of the current tax period, and then any other amount payable under this act or rules made thereunder, including the demands determined under section 73 or 74. This is the order of priority for discharging the tax liability. Clear, sir? That's it. So with this, we have completed all the 10 questions of GST RTP. Income tax RTP हम ऑलरेडी पहले कंप्लीट कर चुका है, अभी completed GST RTP. So with this, we have completed May 2023 taxation RTP discussion. Earlier, we have completed supplementary study material discussion, then supplementary study paper discussion also. So all the inputs in relation to the May 23 examination completed. So my job is done. Now time for your job. Right, sir? So every one of you, before you are going to write May 23 or November 23, for that matter, for any attempt, you must prepare the amendments compulsory. Then do the RTPs. At least 2 attempts RTP. November 2023 RTP that I've already done, discussed, recorded during the November 22 exams, that will be available in our app and as well as YouTube. May 2023, most probably tomorrow it will be available in the YouTube and available as well as in our app. So do watch these videos right before you're going to write the exams only. So I wish you very all the best for your May 23 and November 23 exams. See you, Amma.